Good morning, everybody. Good morning, Samuel, Carlos, Mike, Gary, Rain, Shogun. Good to see you guys. How's everybody doing today? Ron, back in town. Nice to have you guys. Hope you had a good trip up to Virginia. Welcome to the Education Room. Hey, Joel. Good morning. Samuel, nice to see you. Real nice, good. Always a good thing. Good morning, Alex. You guys ready? We're going to do it again today. We're going to talk about rules and advantages. We're going to talk about getting you on the path to success. Good morning, Shogun. We're going to talk about all the things that you need to be successful. And then we're going to talk about some of the things that you don't need to be successful. But we're going to keep it focused. We're going to keep it simple. The morning news was squat. We still have some at 10. Fingers crossed. It was medium impact. Ron, I like how you're disappointed every time that the news isn't a big mover. Uh-oh. Guys, Discord just launched me out. Give me a second here. All right, can everybody hear me? Discord is playing games this morning. We're all good? Okay. Yeah, Ron, I know that you like that momentum. Good morning, Safia. Carlos, good to see you. But we do this each and every morning, guys. ForexFactory.com. Good morning, Tan. I like it when everybody comes out of the woodwork ready to work. We're going to have some fun today, guys. ForexFactory.com calendar. It's just a place to go to know when a news release is coming up. We don't necessarily trade the news, guys. We're not concerned about what the core durable goods orders result was or what the HPI is. Nobody cares, right? It's what we're worried about is it going to make the market bounce, jump, spike? Is it going to make it untradeable, maybe too fast to trade? Maybe it changes direction just out of nowhere because of that emotional response to the news. So every morning I come and I look, and I'm looking for these high impacts first and foremost. CB consumer confidence. I'm not sure what that is, guys. I thought CBs went out in the 70s, right? But apparently the consumers are worried about their confidence, and at 10 a.m. they're going to make a statement, and somebody may react crazy to it. So knowing that there's news gives you an opportunity to just stay out of the way and let the crazy happen. Same thing with medium impact, new home sales, Richmond manufacturing. All this is at 10 o'clock. So if I'm trading during the day, I like to put a note on a piece of paper. Sometimes I'll have Siri. Hey, Siri, remind me at 9:55 to go toast a bagel. Stay out of the way of all the people that may be reacting emotionally. So that's each and every morning, guys. Go through that. Then I'm going to pull it over to the education page. But before we really even talk about the education page, guys, looking at the names in here, we're going to talk about the path. And we talk about the path every day. The path hasn't changed for almost 20 years, guys. And full disclosure, I fought this path tooth and nail when I started with the software a few years ago. When John Novak said, hey, Mark, here's the easiest way for you to get to where you want to be. I lovingly replied to my older sibling, what do you know about software or education? You've only been doing this for 2 decades. And I fought him a lot, and it didn't really work well for me. So guys, there is a step-by-step path to becoming a confident trader as soon as possible. And that's what we all want, right? Everybody wants to be a superhero yesterday. So this is how you're going to get there. And it starts with posting your trades in class, guys. You need to take pictures of your charts and get them in the room. If you take a trade, you need to take that picture of your trade and write all over it. Tell me, this is what I did, Mark. This is why I did it. This is where I did it. This is where I expected it to go. Because what comes from these pictures when you annotate charts, when you post them in the room, is 15 hours every week, 15 hours live. You're going to get feedback on everything that you do. We're going to talk about your ability to follow your rules. We're going to talk about challenges that may have presented themselves. We're going to look at conditions that may have reacted adversely to your trade. But the more you post in the room, even if it's not a trade, even if it's just a chart read, maybe you come and you're looking at your live charts and you're like, man, I have a question for Mark. I'm going to take this picture with my capture software, click and drag, getting both charts in there. When I release that mouse from my capture software, it lets me take a picture. Guys, it may be as simple as you asking the question, maybe with an arrow. Maybe you put a shape on there because you're curious about something. But use this call out button. And here you can ask anything you want. You can tell me what you see. Tell me why. And that's the biggest thing. Tell me why you did what you did, right? Why are you taking trades here? Why are you not taking trades here? And guys, if you take this picture and click copy, all you have to do is paste it in the room. And once it's pasted in the room, just be a little patient. And then you're waiting. Samuel, your first picture? So Samuel says, hey, look, Mark, 1, 2, 3 divergences in the same price range. I like it, starting simple. So Samuel, the next step for you is don't just give me one chart, give me both charts. Give me your big chart and your small chart. And you can do that by clicking and dragging, going up to the top of the left-hand side of the large chart and dragging it all the way down to the bottom of your small chart on the right. And what that's going to do is that's going to embrace that two-chart process that we talk about. When you click the picture, it'll give you the information that you need to do that sound thing. And then don't be afraid of that call-out button. Because Samuel, if you write on that chart, hey, Mark, 3 divergences in the same location may terminate the trend, what you're doing is you're reinforcing the rules. You're reinforcing why you're recognizing those 3 divergences, what they mean to you, why you shouldn't trade into them, right? So guys, your annotation isn't just for me. I can look at your charts and understand what's going on. Your annotation is a reminder to you, this is why I'm doing what I'm doing. I'm seeing what I'm seeing, and you're bringing it to me to validate, to verify, to give you feedback on it so that you can be sure that you're reading the charts properly. And guys, most importantly, and this is something that I realize happens sometimes, make sure that you're understanding the lessons, because sometimes you're going to take a lesson and you're going to create your own understanding that fits the way your brain thinks, but it may not be the correct understanding. So if you present in class, we're going to iron out these little details together and make sure that you're taken care of. The next thing that you're going to do after you post in class is you're going to take that same picture and you're going to put it into your spreadsheet, guys. And I'm going to open up my spreadsheet real quick. There's 2 pages. Your first page is everything that you do. You're going to take a picture, you're going to put it into your spreadsheet, you're going to talk about what kind of trade it was, how you felt, what the conditions were, and then notes on it. Your second page, as you learn the rules, is really just pictures of your rules being met. The green section are all rules-based entries. The orange section is as you work on your management plan. Every grade entry has a management opportunity, which is great. As you begin to recognize patterns, there's a blue section giving you those patterns. And then finally, I made it a little less red because it's easier to read, but there's a whole section dedicated to termination conditions as you go through the rule. The more pictures you take and the more you put into the spreadsheet, guys, the easier life becomes because you're getting this repetition, this recognition through repetition. And using that spreadsheet, the first page where you're tracking your trades, go back and study it the next morning. Every morning, wake up, look at what you did yesterday. What worked for you, right? What were the patterns that brought you success, and what were the items that kind of took that success away? For me, what didn't work was more of a key factor than what did, if that makes sense. The trades that I lost, that I put into class, that I waited for feedback on, these are the ones that really shaped my trading and put me in a better position moving forward. What felt easy, right? What kept you relaxed, guys? When everything is going the same direction, when every indicator on every chart agrees for a trade, it really does begin to feel easy. There's no nerves in there. You're like, oh my gosh, I have so many advantages. How could I not take this trade? And then the other side of that is maybe you find a rule. Everybody latches onto one rule and loves to break it. It's a true story. Some of you will fight momentum all day long. Some of you hate to take the entry from the area. And some of you will trade directly into termination conditions. If you post in the room, I'm going to begin to recognize these patterns in you, and you're going to be able to recognize through studying your spreadsheet those patterns in yourself. And guys, a brief historical study each and every morning, it's going to prepare you for the day. It's going to get your mind right. You're going to say, oh my gosh, yesterday I traded in the man that doesn't sleep. Oh, trust me, I do, Jose. Good morning. It's going to prepare you for the day, guys. You're going into the day with it fresh in your mind. These looks work. These looks hurt me. So make sure that you're taking advantage of that first one. Whoops. And then make sure, uh-oh, my computer is locking up. Let's try this again. Make sure that you're using that second one. Hey, good morning, Jose Trades. Make sure that you're taking a look at that spreadsheet each and every day, filling it up. Guys, as I go through the day, if you post a high probability trend trade, there's a good chance that I'm going to steal it and put it into my spreadsheet. If you post a picture of termination conditions, I'm probably going to steal it and post it in my spreadsheet. Feel free to do the same. Everybody's picture is your picture in this classroom. Everybody's here to learn, and we're really going to feed off of each other a lot. Good morning, Debbie. So post your trades in class. This is you new guys. I'm talking to you. I'm pretty warm and fuzzy. I'm not going to beat you up too bad. And then use that spreadsheet, guys. Get in the habit of filling that out. When I started with the software, John Novak told me, Mark, take pictures of your rules being met, fill up that spreadsheet, post in class, to which I lovingly replied again, because he's my sibling, no way, John Novak, not going to do it. And guys, I lost my tail instantly when I decided to go live. I didn't have any basis. I didn't know why I was doing what I was doing. So you guys are going to take care of that part. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. We're going to keep it simple in the beginning. Guys, it's going to be a very focused process. Simplicity is going to be the key. But you're going to focus on the entries for a high probability trend trade. And a high probability trade, even the description breeds confidence, guys. This is defined as when each indicator on every chart. Good morning, Debbie. I don't know if I said good morning or not yet. Let me make sure that I do. Each indicator on every chart is going to agree with the rules for the trade. Guys, this is when your triggers are the strongest. There's no termination conditions. There's nothing between you and your target. This high probability trend trade that we're going to talk about in the first hour is a trade that typically wins 70 to 80% of the time. It is your first 30 days and beyond. This is your core, your foundation, your alpha, whatever you want to call it. But this trade, a simple focus on this trade for about 20 days when you're new at the software, guys, it's going to give you a skill set that nobody's ever going to be able to take away from you. It's going to make you a chart reader. 90% of what we do during the day is reading charts. 90% is sitting on our hands and waiting for advantages, guys. Rules provide a statistical advantage, and if they're not present, the hardest thing you'll ever do is nothing at all. But you'll be able to open up your workspaces, you'll be able to look at your two charts and have this great understanding. You're going to understand where the market is likely to go. You're going to be able to use Fibonacci and momentum and say, this looks like the perfect target. You're going to understand where the market is likely to continue. And you're going to use that continuation point for an entry for this highest probability trend trade. It's going to allow you to reduce risk. It's going to allow you to maximize your profit potential. And you're also going to understand where the market is likely to stop. And guys, these are what we call termination conditions. A termination condition may reverse the market. It may create a bounce that's untradeable. It's going to negatively affect a trade, and it's going to be a giant waving flag keeping you out of a trade as it approaches areas, as it gets into these areas. But the other thing is these termination conditions behave as an anchor. And your highest probability trades come from a termination condition, come from one of those Fibonacci levels that reverse the market. It's the precursor for your highest probability trend trade. It's the precursor for momentum trades, for high volume area trades. But we're going to focus on the high probability trend trade first. We're going to focus on that one trade that's going to happen on only 2 charts, guys. You're going to learn those rules. You're going to practice those rules. You're going to simulate those rules. You're going to post those pictures in class, and you're going to get feedback on your understanding of these rules. Without that bit of the education, without that element coming into it, guys, you're going to find yourself spinning your wheels wondering what went wrong. I can tell you one of the greatest posts that people make is posting a loser that has every rule followed, that has every statistical advantage, because your brain is going to tell you that you did something wrong. But the reality is anything that wins 70 to 80% of the time has to lose 20 to 30% of the time. It's a cost of doing business. It's a normal part of a positive equity curve. And guys, by studying this one simple rule, you're going to develop that trust, so much so that losers don't affect you the way they did in a previous life and a previous trading career. So simplify, post in there, make sure that you're having the correct rules. Get that feedback from me to make sure that you're following them. Guys, we're going to simplify. It says simplify 2 trades in your plan. What looks will you commit to? You've got to study them so they become easy. I encourage you guys to focus on entries for 20 days. Focus on getting in at the absolute best of the best spot. We're going to teach you. We're going to talk to you. I'm going to show you pictures. We're going to do bar by bars. We are going to burn this image of the perfect entry into your mind. And you're going to let it be simple. You're going to see these looks. You're going to recognize these looks, and it will become easy to you. You can use market replay. Go back, replay the day, retest the day. Practice your rules, practice your entries, practice your exits, guys. You can double your repetitions every day. You can get twice the experience in one day. And then go back, retrade, fix any mistakes on that market replay, right? Let yourself know the potential when you follow the rules. Take pictures of the correct trades. Repeat this process every day until you always take the correct trades, guys. Some people do it in 30 days, some people in 60, some people do it in 6 months. It depends on how much you fight the process and how much pressure you put on yourself to be great at something that you're brand new at. So be new, be a student. Allow yourself to be new. Allow yourself to be a student. Tell yourself it's okay to make mistakes. Mark's going to iron them out for me, and we're going to get exactly where we need to be. And then once you guarantee yourself you can win, because you're always taking the correct rules and your correct rules have proven to win more than they lose, guys, that's when you can go back and you can use one of those prop firms. You can use something like Apex, like Elite, like Top Step, where you can have a minimal financial investment into going live. You can test your plan. You can see how you react when the chips are on the table, right? And this allows you to control. Apex has a thing right now. You can control $50,000 for $18 a month. They're going to give you 90% of everything that you make. 25 grand, I think they'll give you the first 25 grand, but they're going to make you earn it. They're going to make you prove that you can be consistent, that you can always take the correct trades, that you can win more than you lose, that you can manage your losses. And guys, Apex is a wonderful thing. But you shouldn't be going to Apex or Live Money, and I'm not telling you what to do because I don't give trading advice. But if you can't do it on Simulator yet, if Simulator still scares the hell out of you and you're still nervous, work through that. Spend a little time on Simulator. And it's also okay to go back to Simulator if you find yourself having challenges. Guys, I've gone back to Simulator quite a few times in my life to iron things out. So there's your path. It's pretty simple. It really just involves participation, guys. The more you participate, the quicker you're going to get to where you want to be. So without further ado, let's talk about that high probability trend trade. The high probability trend trade is 3 rules. That's it. Only 3 rules. These 3 rules provide 3 advantages. And those advantages give you the recipe for a trade, guys. A trade is momentum plus a clear path plus an entry area. Those are your three rules, providing three advantages. And in the sake of simplicity, the spirit of simplicity, 2 charts, guys. You're going to see people posting 4 charts, 5 charts, 6 charts. And you're also going to notice that when these people post these charts, a lot of times they ignore half of them, right? So why put that mental stress on yourself? Hey, Carl, good morning. 3 rules on 2 charts, guys. Everything starts on a large chart. The large chart is going to define direction. It's going to define the trend of the market. The large chart is going to define momentum. That's rule number 1 for a high probability trend trade, will be strong trigger lines that provide you the advantage of momentum. The large chart is going to define your areas. That's where rule number 2 comes in, making sure that you have a clear path. And then finally, when the rules are met on the large chart, when you have momentum, when there's absolutely nothing in the way, you'll be able to identify this through your chart reading. We're going to go to the small chart and we're going to refine that broad stroke of a brush that the large chart is. What happens in only 1 bar on that 13.2 on that larger chart typically happens in 15 to 30 bars on a smaller, faster chart. So you are literally going to refine the market all the way down to pinpoint the area where the market is likely to continue. And by doing so, you will reduce risk. You will increase your profit potential. And that's where rule number 3 comes in. Rule number 3 is going to be our entry rule. The small chart is an entry chart. It's not a momentum chart. It's not an areas chart. It's not a trend chart. It's only your entry chart. So guys, we're going to keep it simple. We're going to talk about 3 rules. We're going to let it be on 2 charts, and we're going to just keep it as easy as we can. And the first thing that your small chart does, or your large chart does, excuse me, is it's going to let you know which direction you should be looking. And it's not difficult. If the background on your large chart is green, you're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. If the background on your large chart is red, you're in a downtrend. You should only be looking for rules to be met for high probability trend trade short. And guys, I put the question up there because we've all fought the trend, right? We've all said, well, the market says it's going up, but I feel like it should go down. Therefore, I'm going to impose my will on these billion-dollar accounts, and my 2 contracts is going to push this thing down. Never happens, guys. Trading with the trend is really the first advantage that you give yourself. Your trigger lines help define that. Small trigger lines are these solid trigger lines. They're the faster moving average. Larger trigger lines are these dash trigger lines. They're a slower moving average. They work together to give us a lot of information. If the smalls break above the large, guys, this is what paints that background green. This is what lets you know that you're in an uptrend. And if the smalls are below the large, it paints it red. You're in a downtrend, keeping you focused on the direction you should be trading. Rule number 1 says that we have to have strong triggers. And guys, here's something pretty amazing. The only way that you can have strong triggers is if they're going with the trend, because in an uptrend, the small triggers are crossed up and above the large triggers. If they're not, that trend can't be up. Guys, the separation, the space between the small and the large lets you know that the odds are favorable for the market to continue in the direction of the trend. That's it. That's rule number 1 defined. When the smalls break above the large, we get a green background. The separation between the 2 lets me know that I have strong triggers. Strong triggers means that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is your first advantage. In a downtrend, when the small break below, the background paints green. When they separate from the large, both are wide in the direction of the trend. We have odds favorable momentum. That market is likely to continue in the direction of the trend. This is rule number 1 defined. When rule number 1 is in play, guys, this is your best look, your most favorable look for buying a pullback on that smaller, faster chart. And it's going to look like a tail on your 13.2 on your large chart. It's going to look like this wick. All this is in 1 bar is 15 to 30 bars on a smaller, faster chart. And we're going to be able to use the advantage of this momentum to look for an entry on a smaller chart, guys. If you always let momentum lead the way, no matter what trade you're looking for, momentum leads the way, it's going to create advantages for you. Because when those small triggers work their way back inside of the large triggers, this is called a weakening of the large triggers. And when you weaken large triggers, anything can happen, up or down. Anything can happen. You go from odds favorable to anything can happen. So guys, let's commit to that best of the best look. Let's commit to that odds favorable momentum and give yourself that advantage, that first third of the equation, having you look for a trend. This is your rule one picture, guys. Look how the smalls are inside of the large. Anything can happen triggers. And then the market reverses. And this is without the benefit of even using those great fib levels. That odds favorable momentum, there's one of those tails, and it continues on in the direction of the trend. Then the triggers weaken again, and that market reverses, creating odds favorable. There's another tail, and it pushes all the way down, probably another winner. Guys, these are your best looks. Sometimes the market's going to have to make decisions, right? If the smalls are above the large, the background is green, but if they're both angled down, there's absolutely no way I could have odds favorable momentum. If the smalls are up and the large are down, I can't have odds favorable momentum. This is a transition phase. This is where the powers that be are trying to work it out. They're fighting. Dukes up, bar fight. Guys, we don't have to get caught in the middle of this. When this is happening, Nexgen users, sit on your hands. Wait for that advantage of momentum. Wait for that first part of the equation that gets you set up. So guys, is everybody comfortable with this, especially my new people? Odds favorable momentum is literally going to be the easiest thing for you to recognize. And if I pull up a chart and I go large chart only, watch this. If I take off everything and I only put triggers on it, guys, here's a great way to study. When you have odds favorable momentum, do you see how I circle the tail? Smalls below the large, large or wide, they're angled. There's one of those pullbacks that might be an entry. Guys, same thing going the other direction. Smalls above the large, there's a tail. Guys, this is the beginning of the study process. This is the beginning of you creating trust in the rules. And you can scroll back and do this over the course of 10 days. Notice how it doesn't always happen. Sometimes that market consolidates. There's nothing for you to do. But if you hang out just a little bit, you can see that it happens again. So guys, that's rule number one. I'm going to put my indicators back on here because we're going to talk about rule number two. And rule number two is going to give you the advantage of a clear path. Rule number two is going to make sure that there's nothing in your way, that there are no termination conditions. And rule number two also happens on the large chart. It says no termination conditions can be present, guys, and a termination condition is an area that may reverse the market. It's an area that may create a bounce. It's an area where price typically reacts. It's an area that takes away your advantage of a clear path. The areas that we look for can be divergence highs and lows, those magenta and cyan lines. It can be red Fibonacci resistance. It can be blue Fibonacci support. It can also be these yellow one-to-ones. That's a lot of areas, right? That's okay. Not all of them are going to stop the market. You're going to use a simple two-part process to determine whether or not these lines are lines that we want to trade through or if we want to respect, guys. We're going to make sure that we have a clear path, and we're going to do that with a simple comparison on the large chart. And we're going to compare the area to the trigger lines. And the first thing that has to happen to determine a termination condition is price must reach the area, meaning that these dynamic Renko bars have to come down and come in contact with that support, right? Maybe a tick off. But when price reaches the area, the only thing that you have to do is ask yourself, where are the trigger lines? Price trends down, reaches support. If none of your trigger lines have broken through this area, you've reached a termination condition. It's an area that may create a bounce. It's an area that may stop and reverse the market. But what it does is when price reaches an area and the trigger lines don't break through, well, then you have no clear path. And a clear path happens if price reaches the support above and none of the trigger lines have broken through. I'm just going to pump the brakes. I'm going to wait for a second. I'm going to say, all right, let's see. Because areas break, and areas typically break when strong triggers are coming into them. But in order to have a clear path, I need both the small and the large triggers on the other side of this support, which means that support is going to behave as resistance. And when support behaves as resistance, guys, look at this odds favorable. There's one of those tails sitting right on resistance with every trigger line below it. There's your continuation down to the next potential area. So guys, it's just a pretty simple recipe. If price reaches the area and absolutely no trigger lines go through, you have what we call a termination condition. Rule number 2 isn't met. The path isn't clear. If the small and the large break through the area, get to the north side of resistance, the south side of support, guys, now the area is considered broken. Now that path is clear. Now you're looking for that odds favorable momentum. And we're going to look for those tails for one of those potential entries on the smaller, faster chart. And once again, I ask the question, whoops, man, they're bumping me again. I'm on my way back, guys. I am speaking to you from the great beyond, but I'm on my way. It's so dark in here and scary. Not really. I'm still sitting in my office. Don't panic, guys. All right, we should be back. I asked the question again on this picture, guys. What if you insisted on a clear path? Would it make your trading more profitable? You're already trading with the trend, right? You're already trading with momentum. Now, if you have a clear path, you're just compounding those advantages. You're getting closer and closer to having the 3 advantages that you need to take for a trade. You're going to have to study termination conditions a little bit. And it's going to take a little more practice than that odds favorable momentum. But if you keep the recipe in your mind every time, price reaches an area, trigger lines remain below from a high, well, then you have a termination. You have an area that may reverse the market, that may stop the market, that may create a bounce that pulls you out of a potential trade. Guys, this divergence high, where that magenta line printed, is not a termination condition. Say it with me in unison in your head. This pivot is nothing more than a place where the market went up and down, and it lost a little momentum. Your indicators in the background said, hey, the momentum's not following. Let's give Mark this magenta line to let him know that the move up was losing momentum. Guys, don't give it more power than it deserves. It's just a pink line, a magenta line. But when price comes back and reaches that line, and then all of your trigger lines remain below, now it's a termination condition. Now it's an area that may reverse the market. And if it does reverse the market, well, we call that a strong top. A termination condition that creates a full reversal is what we call a strong top. And that strong top is the precursor for your highest probability trend trade. A trend trade that happens after a termination on your 13-2. Guys, that's your best of the best. Price reaches resistance, absolutely no trigger lines break through. Not going long into this area. It's acting as a termination condition. Rule number 2 is not met. There is no clear path. Price reaches resistance in 1-to-1s. Absolutely no trigger lines break through. Not going long into that area, thank goodness. It keeps us out of a potential loser. So guys, these are terminations from a high. And then there's going to be termination conditions from a low as well, of course, right? The market moves both ways. We're watching futures. Guys, we can make money both ways. Doesn't matter what's going on in your 401k. If that market's going down, we're going to look for shorts. But if the market's going down and it reaches support, in this case 1-to-1s, all of your trigger lines remain above, you don't have a clear path. Rule number 2 is not met, guys. This is a textbook termination. When this termination condition creates a full reversal, we now have a strong bottom. Termination condition, no trigger lines break through, creates a full reversal. We have a strong bottom or a good bottom, the precursor for your highest probability trade. This pivot has lost momentum. It's not a termination. But when price reaches that divergence low, now it's a termination. We call that a pivot stop out. Should this pivot stop out create a full reversal of the market, give you odds favorable momentum, well, then you have that best of the best. So guys, is everybody comfortable really letting it be two options? Either the path is not clear or the path is clear. This is your first 30 days. Really just letting it be one or the other, black or white, keeping it simple, focusing on the best of the best as you learn to read your software. Your high probability trend trade will develop into a medium probability scenario every now and then, guys. Your high probability trades are going to teach you to read your charts. They're going to teach you to recognize advantages. Eventually, you're going to work your way into a medium probability trade. And I introduced this with the termination conditions because your first medium probability trade is going to revolve around those termination conditions. A medium probability trade is defined when most indicators line up for a trade. However, small issue exists. Your first small issue, as you grow with the software, as you learn to read it, is going to be areas with the potential to break, using that odds favorable momentum to determine that that Fibonacci level may in fact break. Guys, your chart reading is going to identify that area. Your chart reading is going to identify that issue. And when you're executing medium probability trades, you're going to have to manage them assertively. Your chart reading is going to allow you to manage assertively, guys. It's going to give you recognition in the moment to reduce risk at problem areas, to get to a zero loss level. Your first medium probability trade is going to be what we call a 50-50 trade. And it's not 50-50 because that's your chances of winning. It's 50-50 because 50% of your trigger lines will make it through that area. 50% will lag behind. That's all. You could call it a straddle trade. You could call it a one above, one below trade. But when you have this odds favorable momentum and the small triggers break an area, it has the potential to break, guys. Fibs break all the time. They have to, or we'd be caught in this little ping pong range. But it's not a clear path. You don't have the advantage of a clear path. Is everybody comfortable with that concept? And say it, write it down, do something. 6980 has not broken. It is not a clear path. It's not a high probability trend trade because it only has the potential to break. 6943 had the potential to break with that odds favorable momentum, but it didn't. And you would have had to have managed this trade aggressively. Ultimately, 6980 does break because the smalls and the large get to the other side. But guys, this will be your first taking a shot at areas that are likely to break. And I'm going to give you a checklist that helps you have the best advantage. But that 50-50 does not give you a clear path, so don't sacrifice momentum, right? Make sure that you have a market that's likely to continue in the direction of the trend. And don't sacrifice your entry area. Make sure that your rules are met perfectly, right? Let it be one issue, one small issue, taking you into that area. So guys, those are the termination conditions. They are a termination or they're not a termination. And that's keeping it simple. If price reaches, no trigger lines break, no clear path. If the small and the large get to the other side, that path is clear. Look for your rules to be met. This divergence low is not a termination condition, but when price reaches it and the trigger lines remain above, now it's a pivot stop out of a prior divergence condition. This can be a very powerful termination condition. When it creates a full reversal, we now have a strong top or a strong bottom. When that pivot stop out happens at Fibonacci, it becomes even stronger. And guys, this chart reminds us that 90% of what you do during the day is going to be reading your indicators. Resistance, no triggers through, no long trades. Pulls all the way back to support, no triggers through, no short trades. Oh my gosh, is the market ever going to sort itself out? Back up to resistance, we get a pivot stop out of the divergence high. None of the triggers break through. Now this is a strong top because it creates a full reversal, because it gives me odds favorable. There's one of those tails, your highest probability trend trade. Sometimes you have to be a little patient. Price reaches, Whoa, it kicked me out again. Discord is killing me today. On my way back. Almost there. All right, here we go. Guys, the first hour feels like a lecture. It really does. The second hour is the discussion. But if you have questions about anything I'm talking about, get them in the room. Guys, when this termination condition, price reaches 1-to-1s, no trigger lines break through, look at the bounce. When it creates a full reversal, when the large triggers go from green to red, when the small triggers are above the large triggers and that path is clear, there's one of those tails. There's that best of the best look, right? Things that happen after termination conditions tend to work better. Sometimes the market is going to exceed a Fibonacci area, not reach the next area. Sometimes that market's going to have a clear path and odds favorable momentum. Guys, this next termination condition that I talk about is the only termination condition that will not happen, or you won't see it first on a large chart. Because the small chart is a refinement tool, you're going to see this on a small chart first. 3 divergences in the same price range may terminate the trend, and this is a very powerful condition when the third divergence happens with the small triggers inside of the large triggers. You've gone 3 losses of momentum, 1, 2, 3, it may terminate the trend. You've gone from odds favorable to anything can happen. You can visually see the momentum is going away. It becomes a little more powerful. Third divergence, higher than the previous, higher than the second, becomes more powerful still. It's a head and shoulders pattern, guys. Price couldn't reach the previous price. You're losing momentum. The triggers are weak. Guys, you're going to see this look from a low or this look from a high on your 5-1 chart. When things like this are happening on the 13-2, you don't see that change on a slow chart. But those 3 divergences will help you identify this potential turn. Those 3 divergences will help you identify this potential turn. Is everybody comfortable with that? And then guys, I got the greatest question this morning in my email. Hey Mark, if the large chart is where we define areas, right? And the only termination condition that I respect on the small chart is 3 divergences, can I ignore those synthetic fibs on the 13-2? Can I ignore that 5-1 fib on the 13-2? I hope I phrased that right. But guys, that is an amazing question because your 13-2 chart, this is your 13-2 chart. This skinny fib that doesn't extend to the right, this is your 5-1 Fibonacci area. It's placed on your 13-2 chart for a reason, guys, because we're going to respect it. When price reaches it and the trigger lines don't break through, we're going to respect every line on the 13-2. This is where we define our areas. This fat trigger, or this fat fib, is your 21-3 chart. It's a different time frame. Once again, we're going to respect it when price reaches it and triggers don't break through as a termination condition. These are your 13-2 fibs, the ones that extend all the way out to the right. Is everybody okay with that, guys? The 13-2 uses native fibs. The 13-2 also uses 5-1 fibs and 21 fibs. And every fib has the same value. Every fib is a line when price reaches it, if the triggers don't break, demands respect. Guys, give me a Y in the room if you're with that. And then I was able to scroll back, and guys, you guys get me in study mode a lot, and this is a pretty good one. And thank you, Jose, for making me think about this differently. So guys, these are the same fibs right here. This is a 5-1 fib. This is the exact same 5-1 fib, right? 43.72, 43.72. This fib from your 5-1 chart has been synthetically placed on the 13-2. And we respect it. When price reaches it and absolutely no trigger lines break through, guys, it's a termination condition. But your 13.2 chart and your 5.1 chart, your large chart and your small chart, are different charts with different bars, with different moving averages. So it's the exact same fib, but they may appear different in regards to a setup. On my 13.2 chart, does everybody see how I have that 50-50 look? The small triggers have broken through this 5.1 fib, but the large triggers have not. It's 50-50. This is an area with the potential to break. But if I look at my entry chart, that potential pullback looks like it's coming directly from the Fibonacci area. Guys, I'm not worried about the Fibonacci area here on the smaller, faster chart because my large chart says that it has the potential to break. The small triggers are through. It's one of those 50-50, one of those medium probability trades. Guys, if you've been with me for a while, and this was a pretty mind-blowing concept for me this morning, give me a Y in the room if you're with me. Same fib, but it's a different reaction from the trigger lines because they're different charts. Does that make sense? Here it looks like one of those termination conditions. Here it looks like one of those potential to breaks. I'm defining areas on the large chart, and I'm only using the small chart for entries. Guys, let me give you this picture. It's the same concept. People ask me, Mark, how come these 1-to-1s didn't print on my 13.2? Because they're different charts, because they're different time frames, guys. And this is why we use the 2. We're always going to respect price reaches an area, no trigger lines break through. We're always going to respect that on the large chart because the large chart defines areas. However, because the large and small charts are different, the only time I'm going to worry about something on the small chart is when it's 3 divergences in the same location. Hopefully that helps a couple people. Hopefully that lets a few of you, and it may be the same situation right here, right? This 5.1 fib may be a 50-50 on the large chart because it's a different time frame. Man, guys, I got a little bit smarter today. I really did. So let's go back and let's let the large chart define the clear path, define the areas, make sure that we're good. And let's let the small chart define entry. Jay Solar, did that help? And I'm telling you guys, when you ask questions, it makes me rethink things. It makes me sometimes present things in a clear manner. Awesome. That was pretty groundbreaking for me, and I went back and forth with John on different technical things, and ultimately, they're just different charts. So guys, keep those questions coming. So far, what have we done? We've given ourselves the advantage of momentum, right? Samuel, I don't know you need them if you don't ask. I can't stress that enough. If you're sitting quietly behind your monitor saying, I wish he would talk about this, just type it in the room. Right? Just type in there. I wish you'd talk terms more. And I will, I promise. So we have the advantage of momentum. Thanks. We have the advantage of a clear path. Guys, let's pinpoint where the market is likely to continue. Let's go to our smaller, faster chart. Let's refine that broad stroke of a brush. And guys, let's pinpoint that area where the market is most likely to continue. And just a little reminder, what happens on only one bar on the large chart, we've defined momentum, we've defined the trend, we've defined the clear path. Now we're going to refine that one bar using 15 to 30. And guys, we're going to pinpoint the area inside of favorable large triggers for continuation. And rule number 3 says exactly that. You're going to use a limit order, which means that you're going to wait for the market to come back to you. And you're going to use a limit order to buy or sell a pullback. And a pullback is a small retracement in price that's counter to the underlying trend. So if everything says up, if everything is cranking to the upside, if the momentum is strongest, if the path is clear, guys, I want my small chart to come down. I want these guys to fight everything that the large chart says, right? Large chart's the large crowd opinion. It's that direction. It's the areas. The small chart, there's going to be a small crowd that wants to fight momentum. There's going to be a small crowd that wants to fight direction. Guys, they're going to give us our perfect entry. They're going to go against the large chart, and they're going to give us a little pushback to an area inside of favorable large triggers. And that's rule number 3, guys. We're going to use a limit order, and we're going to wait for that pullback. And we're going to buy or sell a pullback at an area. Areas can be fibs, mid bands, or 1-to-1s, yellow 1-to-1s. And we're going to make sure that those areas, for the sake of the brand new users, those areas are going to be inside of favorable large triggers. And favorable large triggers are defined as wide. They're in the direction of the trend. And both your large triggers and your synthetic triggers on the 5-1 should be overlapping, one on top of the other, because when they are, it creates your smallest window of opportunity. And your smallest window of opportunity means that you have the least amount of risk. So I'm going to give you guys this picture of favorable large triggers. Will there be times where you take trades without them? Absolutely, when you grow with the software, when you recognize advantages. But as you are learning, keep it simple, guys. Keep it focused. We're going to wait for a pullback on the 5-1. You're going to identify the areas, you're going to identify your triggers, but you're going to wait for that small crowd to fight everything and give you a reversal bar. And that reversal bar signals the beginning of a pullback. And at the time of this reversal bar, use your drawing tool, guys. Go from the highest point of support to the lowest point of support inside of favorable large triggers. And guys, this is where the market is most likely to continue. You have pinpointed your entry point. From the high point of support, the highest point of support, to the lowest point of support inside of those favorable large triggers. From the highest point of support to the lowest point of support inside of those favorable large triggers. I'm going to take this picture. What I do when I'm creating this area of opportunity, guys, this window of opportunity, I'm drawing a box around my trigger lines from the highest point to the lowest point. And then I'm going to refine it from the highest point of support to the lowest point of support. And guys, this is the area where the market is likely to continue. Give me a Y in the room if you're with me on this. Guys, trades come from areas. Areas act as bounce points. That market pulls back. We're going to have our limit order at the top of the window because of the momentum, because of the clear path. But mentally, we're cool if it comes to the bottom of the window, right? Because it's still in the window. It's still in that area where the market is likely to continue. My rules are still met. My conditions haven't changed. Guys, mentally, I want you to be prepared that you may see your equity go negative a little bit as this market sorts itself out. But we always protect. So your initial stop will go below the window of opportunity, below those large triggers, below those areas where the market should not go. Because if it does, if this market just continues down all the way through, guys, I don't want to be in that trade anymore. I've lost the advantage of my entry area. So if this market exceeds the window, I've got to stop waiting to take me out of this trade. This is part of my 20%. This is the cost of doing business. It doesn't make the entry any less spectacular. It doesn't make the advantages any less prevalent. It's simply a cost of doing business, guys. And I'll take this trade 1,000 out of 1,000 times. You can't keep me out of this trade. Because when the rules are met, the advantages are in place, this is a trade that typically wins 70 to 80% of the time. This is a trade that creates the feeling of confidence through the memory of success. This is the trade that teaches you to recognize key advantages that you're going to be able to take into any trade that you want to take. The advantage of momentum, the advantage of a clear path, and the advantage of an entry area, that point where the market is most likely to continue. Guys, this is a trade that embraces simplicity, that keeps you focused on 2 charts for 3 specific rules. And guys, this is a trade that typically reaches its profit target. Once it begins to move in the direction of the trade, I can reduce my risk below the reversal bar. And guys, this is your trade. This is your highest probability trend trade. This is your best of the best. Your first 20 days should revolve around finding your entries. Remember when we went back and we circled those tails, right? We had odds favorable. The path was clear. We circle the tail. Guys, if you do this little bit on your large chart, if that circle lines up with support inside of favorable large triggers, you have a high probability trend trade. You need to take a picture of that trade, right? Whether you took the trade or not, even if it's historical study, you need to use that call out button and reinforce why you think that's a trade. Because I had odds favorable momentum, right? This gives me the advantage of momentum. Because there were no termination conditions, this gives me the advantage of a clear path. By typing out these rules, it's going to help you understand what it is that you're looking for and the advantages that they provide. And then finally, I had an area inside of favorable large triggers, right? I'm reinforcing that entry point one more time. It's circled. I see it. Guys, when you take this picture, when you annotate this chart, upload it to Screencast. When you upload it to Screencast, guys, you can post it in the room, or you can just copy that picture, post it in the room. But the most important thing to do with this picture is to go to your spreadsheet and to say, this was a rules-based trade. Because it was a rules-based entry, I'm going to create a hyperlink. I'm going to go back to my spreadsheet, and I'm going to call this high probability trend trade long, so I can come back and study it tomorrow to make sure that I can catch it when it sets up. Guys, this is your path. And let's go back to those circles that we made earlier. Circling those tails, right? When there's odds favorable momentum. Guys, this doesn't guarantee that there's a trade, right? So I'm going to circle the tails. And let's go through the process. This is just the S&P today. Guys, this is also a great way to see if you're missing anything. Whoops. So we're going to look at the bar that the tail's on. On this tail, whoops, the trigger lines haven't broken through the one-to-ones yet. Does everybody see that? Technically, that's into a termination condition. I'm going to get rid of this circle, guys. 90% of what I'm doing is waiting for advantages. Even though the market continued up, my trigger lines hadn't cleared the area yet, so I'm not taking that one because I don't work on maybes. Here, the small triggers and the large triggers don't agree. I'm losing that circle. Guys, price comes down, reaches that 5-1 support. There's the trigger line. This is the worst example ever, right? Because we're trading in determination conditions. That market was trying to sort itself out right around news this morning. But let's play the hypothetical game, guys. If I circle these tails, and let's take off the noise just for the sake of the lesson on entries. Let's get rid of our fibs and trust momentum a little bit. Let's see what this circle looks like on a 5-1. News in 2 minutes. Thanks, Ron. Guys, here's my circle. There's my area of support inside of a large trigger. But it's not favorable large triggers, right? They're split. There's distance between the two. But it still pulls back to those areas inside. And guys, that's kind of the point of the first day. Everything says down. There's a ton of strength. And look how the market pulls right back to that midband, right inside of favorable large triggers. Guys, these are patterns that repeat themselves over and over and over. All you have to do is get comfortable with the look. So let's do this. Let's turn off our cheater circle real quick. New users, this is for you. Let's let the 13-2 lead the way. Does everybody see that odds favorable momentum? Does everybody recognize that the small are below the large are wide, they're angled in the direction of the trend? And guys, there is absolutely nothing in the way. Price didn't reach an area. Therefore, it's not a termination condition. And I remember this picture because this was the amazing picture from that lesson that we got today on 50-50s, and I want you to see this. Guys, if it's a 50-50 trade, it means that it has the potential to break, which means that your entries on the 5-1 should be perfect. On a 50-50 scenario, when an area has the potential to break, my money is worth a perfect entry on the 5-1. No divergence on the 5-1. I'm not going to forfeit momentum. Small window of opportunity. I refuse to forfeit my entry. Because my small issue is not having a clear path, right? My small issue is that the area hasn't broken yet. So I'll allow that entry to be perfect on the 5-1. And guys, we're going to go through that look. Small triggers are through the area. The large triggers are not. Is everybody comfortable with that? This is your 50-50 look. The smalls are through the area. The large triggers are not. This area right here has the potential to break. And when everything says down on my 5-1 chart, I'm waiting for that reversal bar. And guys, that reversal bar comes from the exact same fib that has the potential to break here. Is everybody comfortable with that? Area may break, 50-50. I have a divergence-free reversal bar on my 5-1. Therefore, I'm going to go from the top of my triggers to the bottom of my triggers. And I'm going to go from my lowest point of resistance to my highest point of resistance. And I'm going to identify where that market is likely to continue. And then I'm going to put a limit order just below. Whoops. See if I can do this. I'm going to put a limit order just below that lowest point of resistance. Is everybody comfortable with this? 50-50, odds favorable. Everything says down with crazy strong momentum. I get a reversal bar and I identify my window of opportunity. My limit order goes at the bottom of that window because of this momentum. The market pulls up and reaches that limit order at the bottom. I'm now in a trade. There's my reversal bar. I've reduced risk behind the reversal bar. I have literally 2 to 3 ticks on this trade. And there it goes. Guys, this is a tip that you can use to go back to study entries. When the rules are met and they line up, you can do that bar by bar. Well, Jay Solar, that's a great question. So let's go back and look at it, right? Guys, every trade needs a management plan. Every trade has management. So if we take this trade, Jay, that's a great question. The difference between high probability trend trades and medium probability trend trades are the way you manage them. Sorry, I went too far. Oh, nope, I didn't go far enough. I apologize. 1556. So Jay Solar, on a medium probability trade, right? This is your entry. and this is your risk. Are you comfortable with that? You're in at about 43.75, 75. Where's your first trouble spot? Your first trouble spot is that same area on the 5-1 that has the potential to break on the 13-2. Does that make sense? So that's the trouble spot. It hasn't broken yet. So for me, Jay, when I get back to that maybe area, that's my first profit target right there. So if I'm in 2 contracts, I'm out at 72.50. That's it. I'm done on my first contract because I don't know if this area is going to break. All I know is that I made it back to it, and I don't have any idea what the market's going to do. So there's quick profits, and I'm break even on the trade, right? So now let's use Fibonacci for the next target. 69. 69 is my target, right? So look at this. If I enter the trade here at the circle, and this area has the potential to break but hasn't broken, I'm going to take profits at that area. I'm not going to just hope that it bounces or breaks. I'm going to get paid. I'm going to take a portion of my position off. I'm going to get to a 0 loss level. That way, if this fib that hasn't broken ends up holding, I made money and I'm out break even. But I'm turning my attention. Remember I said you're going to be able to recognize where the market is likely to go. Guys, with all this momentum, if this Fibonacci area breaks, well, 69 becomes a great target. So Jay, my second target's probably down here as I mature as a trader at that Fibonacci area. And look where it turns. It turns from 68.50, which means that if I used Fibonacci for a target, I got paid right at 69, 2 ticks above the low in the market. Does that make sense? Does that clear it up a little bit? So different trades are going to have different management. Awesome. Guys, I'm telling you, your questions make this class amazing. I'm going to get these off there. Ron, I don't know what I said, but sorry. But let's keep it simple. Has anyone ever had their brain start telling them that they need to look for things they don't need to look for? Your brain says, Mark, what about the color of the fibs? Your brain says, but what about that one line? What about those one-to-ones? Guys, let's keep it simple. Here's a checklist designed to help you focus on entries, guys. I give you this checklist every day. You're going to fight me for a month on whether or not you use it, but I'm telling you, I've never had anybody in the history of this checklist do worse than 70% when they follow the checklist. When the market comes from a good top or bottom, and guys, the video on this checklist is John Novak's pride and joy. It is identifying termination conditions, when they're likely to hold, when they're likely to break. I don't care if you've been with me for a day or 1,000 days. Go rewatch this video. It'll be mind-blowing. And remember, you can take a trade without a good top or bottom, without that termination condition that creates a full reversal, but it becomes that 70 to 80% chance, right? It becomes that highest probability when it comes from a termination. And then you're just going to ask yourself, do I have odds favorable momentum on both charts? Are my 13-2 odds favorable? Is my 5-1 odds favorable? No termination conditions on the large chart, right? No 3 divergences on the small chart. And then finally, do I have an area inside of favorable large triggers? Guys, take this checklist and print it out and put it on your desk. If you follow this checklist, if you keep it a simple matter of rules met, rules not met, it's going to free you from a lot of emotional baggage and a lot of second guessing. I'm also going to give you the exact same checklist. Guys, I'm a visual kind of guy. Is the market coming from a good top or bottom? I stole pictures from the resource material, helping you define good tops and bottoms, that termination that creates a full reversal. There's your odds favorable momentum defined, right? It's the same look on a 5-1, on a 13-2, on a 34-5. Odds favorable means that there's separation. Anything can happen means that they've come back together. Here's a little idea on those termination conditions, right? Whether or not you have a clear path. And there's a couple examples of that window of opportunity. Guys, this is one that you can look at every morning, right? Go through, reinforce the rules, go through that spreadsheet, find a couple more examples, right? Go through what you did yesterday and see what's happening, see what you did, see what worked, see what didn't work. But guys, if you keep it simple, if you're using a checklist, it takes a lot of strain off of your brain. And then finally, here at the end of the first hour, guys, my lecture time is over. The rest of the class is going to be up to you for the most part. Your pictures, your questions. Guys, this is a simple plan for consistency, and I share this every day too. This simple plan for consistency came into fruition because a gentleman called me one day and he said, Mark, I'm losing. And I'm not just losing a little, I'm losing 80% of my trades. And I said, do me a favor, because you've never posted a trade in class, show me what you're doing. So he shows me his trades, and he's looking for trend trades, and he's looking for counter trend trades, and he's looking for momentum trades, and he's looking for high volume area trades, and he's looking for tiny little pushes on retracements to get back to the trend trade and trying to profit off of those. And guys, I kid you not, he had no less than 8 or 9 different trades, each trade with 4 or 5 rules on it. So he's identifying 45 things every time he looks at his chart and just confusing himself and losing them all, right? So I said, hey, let's simplify. Let's focus on the best of the best. Let's give yourself these advantages. And this simple plan for consistency, guys, this is a good groundwork, a foundation, something for you to use until your education moves along a little bit, until you get to the point to where your chart reading is comfortable and you write your own plan. But it should begin with never fighting the large chart direction, never fighting the large chart momentum. This alone is going to take more than half of your losers out of the equation. And guys, look for reasons to win. This checklist has you focused on advantages, not disadvantages. And when this checklist is met, guys, you have a high probability trend trade. Enter that trade. Don't hesitate. Give yourself that entry. And great entries create manageable trades, but in the beginning, you're not going to be able to read your charts effectively, efficiently, fast enough. So let your management be very mechanical as well. And Jose, this may be a great idea for you as you work through the management, right? Let your initial stop be outside of the window of opportunity. When you take your beautiful entry, let your stop be where the market shouldn't go. And guys, if the stop is where the market shouldn't go, there's going to be times where that stop gets hit, but there's nothing for you to do after entry. Either you're stopped out, and that's going to happen from time to time, or you're going to get a reversal bar. So when you get a reversal bar in the direction of the trend, you're going to move your stop 2 ticks above that reversal bar. It is established that it's moving in the direction. You're going to reduce risk, guys. This is what great entries do for you. Because you wait for the pullback, your risk is reduced. And guys, here comes the easiest part for you. No more opinions or emotion. Your first target is at $100. Target number 1 is $100. After the reversal bar, there's nothing for you to do. We don't need your opinions or your anxiety or your fears. You either get stopped out of that trade for a small loss, or your first target is hit. $100, guys, quick, easy. Let's get that dopamine kick. Let's capture that $100 fast. You've reduced your risk. You've got $100 in the bank. Nobody can take that from you, and you're going to move your stop to break even. Guys, now you have nothing to lose. You have money in the bank, and your next target is only $200. You're either going to get stopped out, break even, or it's going to hit that target. Guys, and if it hits that target, that mechanical, methodical, pragmatic, no emotion target, that's a $300 trade, guys. $300. If you take 4 of these during the day, if you sit on your hands and you take 4 trades a day and win them all, that's $1,200. But let's be honest, you're going to lose one of those, right? So you're going to have $900 from the winners, minus, we'll just say 200 from the loser, right? That's about $700 on a high probability trend trade. Only 4 trades, 75% winners. $700 on the day on a 2 lot, guys. That's fantastic. But let's say hypothetically, one of those trades gets stopped out break even, you only made 100, and now you're down to $500 a day, right? 4 trades, all perfect. 2 of them worked great, 1 of them stopped you out early, the other one just completely ran you over. That's $500 a day. That's $2,000 a week, guys. That's an $8,000 month, which puts you at a $96,000 year from only looking for the best of the best, guys. And you don't need more trades. Just take the best trades. Ultimately, you'll up your contracts, right? So super mechanical, methodical, no anxiety. Let the market tell you when it's time to make a move. Guys, this is half a sheet of paper. This is your entire plan for the first 30 days. And then you're going to work into that 50-50, one area not broken, right? And you're going to take pictures of the shorts, you're going to take pictures of the longs, and your pictures, if you click on them in the moment, see if I can get this to open real quick, is going to remind you that my money is worth the perfect entry. You're going to define it in pictures, and now we're going to look at it. Do you have strong triggers on the 13-2? If you don't, you should never consider this area with the potential to break. Do you have strong triggers on the 5-1? Guys, you want momentum everywhere because you're giving up that clear path. No divergence on the 5-1. No slowdowns on the 5-1. I'm not forfeiting momentum if my path isn't clear. And then do I have a good top or bottom on the 13-2? Guys, remember, this is a plan for simplicity for brand new users, giving you all of the best of the best. You're going to grow as your education grows. But if all of these are entered, guys, enter at the area. If divergence prints, no trade. But because it's a different kind of trade, and Jose, the one that we managed, was different, right? The initial stop is the same. Put it where the market shouldn't go. Use that reversal bar the same way you would on a high probability, because it's began going in the direction. But guys, if divergence prints while you're in that trade, then it's no longer a trade you want to be in, right? Because divergence means that we're losing momentum and we no longer have a clear path. So if divergence prints, I exit the trade. My first contract's at the first trouble spot. That area that you're hoping breaks is my first trouble spot, guys. I'm taking profits, I'm going break even, I'm not risking. This is a medium probability trade that needs to be managed assertively. My second contract, maybe $200, right? Keeping it simple in the beginning until I learn how to gauge when it's likely to get to that next area. This is why I talk about 3 divergences in the same location. Because 3 divergences in the same location is how you're going to manage these medium probability trades. If my entry is at a mid-band and 1-to-1s inside of favorable large triggers on a 50-50, my first trouble spot becomes this fib, this area with the potential to break. I'm taking profits, I'm getting to break even, and I'm kind of relaxed, right? Pragmatic. If a second divergence prints, I might exit the trade, or I may say, it's so strong on the 13-2, I'll hold it, I'm already break even, everything's good. But then when that third divergence prints, I manage out of that trade, guys. I make money, I make small profits, I go to 0 loss levels. I am aggressively managing a medium probability trade. Guys, this is 2 trades. They happen on 2 charts. There's checklists for both. All I need you to do now is study. All I need you to do now is to go back and circle tails, right? To respect areas hit with absolutely no trigger lines through. Guys, look at this. Termination at 76. There's no reason to get run over, is there? Rule number 2 keeps you safe. Guys, this market's consolidating a little bit. It's struggling to get through. It's either going to go up or down, but when resistance holds to support, to resistance, to support, to resistance, guys, sit on your hands and wait for advantages. Wait for a clear path. That's the first hour. Congratulations, you survived all of my talking. Guys, the second hour, we're going to start looking at your charts. The second hour, we're going to answer your questions. The second hour belongs to you. The third hour belongs to you. So, if there's something that happened and you need a little clarity, I want you to use your voice, guys. I'll be back in about 5 minutes. When I come back, we'll get things going once again. All right, guys, I'm back. Let's get into the second hour. This is where we're going to talk about everything that you're doing. Gary, he doesn't have to post his chart. Guys, there's going to be a time where you're here because you want to be here, and you're posting 6868. Gary, do you need a chart to understand? Watch this, guys. Strong triggers, smalls break through. There's a pullback right to the support inside of favorable large triggers. There's his chart. Beautiful, isn't it? Pretty cool. But his entry might be a little different. He might use a range chart. He might use some other factors. But the reality is that he has a termination condition, right? So the small triggers break through. Guys, there's one of those 50-50s that don't work. This is why we don't hope. Well, when this doesn't work and divergence prints and those large triggers roll and everything's going up, that's a great look. Odds favorable momentum is a great look. Area right at support is a great look. So that's why he did what he did. It's picture perfect, right? Jerry, how long have you been with Nexgen? 7 years? Is that right? I get people's dates messed up. Guys, there's going to be a point where you come to this room, 8 years, where you do things and you say things, right? And there's still education. Some of you will catch this trade, some of you won't. As you grow with the software, guys, this kind of gives you an idea of what to look forward to. Look at this potential short, this 50-50. 1 divergence, 2 divergence, 3 divergence, 4 divergence. No reason to hope that area is going to break. Your small chart's telling you that it won't, right? So guys, remember to worry about your trading, right? Focus on your trading. If you have a question on something that's said, I'll go back and look at it too. Sometimes I'll be able to tell you exactly why they did what they did. Sometimes I won't. Ron C. gave me heartburn every day until I figured out his trades. But then it got better. All right, let's go through and take a look. So guys, I'm showing you this. This is how I have to scroll to get back and forth. So I go to the top of the room and then I go to the bottom of the room and I ask and I answer questions. So if I miss a question, if I miss a chart, just let me know. It's never on purpose. Let's see. Oh, I like this. Look at this, guys. 3 divergences, same location. It ends up, excuse me, reversing the market. It reverses the market and gives odds favorable momentum. And Joel, absolutely brilliant here. Guys, I want you to see something. The larger through, the smaller through, and the magenta line has not been hit. Which means that 69.38 is a potential target. It's not a termination because price didn't reach the area. Guys, with all those advantages, look at Joel's entry. Absolutely beautiful. Quick profits. And then taking it again. Joel, what a great looking picture. Such a great looking picture that I'm going to steal it. Well, let's say liberate. I'm going to liberate Joel's picture, guys. I would encourage you to do the same thing. And I'm going to come to my spreadsheet, right? Because what he did was magnificent. That's everything that I'm looking for. And I'm going to post the link into my spreadsheet, guys. And I'm going to paste the address. And under text to display, we're going to say Joel's perfect trend trade long. And I'm going to come back and study it. And now I'm up over 240. And I'm going to save it. I'm going to make sure that I come back and I can do this again. Great job, Joel. Second picture. Let's see what we have. There's the first trade. Comes up. Money. Money. And then look at the difference. Ah, Joel, great that you would post this. Guys, remember, there's a lot of information from the losers. Now we have weak triggers on a 50-50. Does everybody recognize that? Not only have you given away the advantage of momentum, but you've also freed yourself from the burden of a clear path. And this trade does exactly what we expect it to do at Fibonacci resistance with weak triggers. Joel, great picture. Can you guys hear me? Okay, thank you. Just wanted to make sure. I'm going to scroll back up to the next pictures, guys. Joel, couple great examples. One of following rules, finding success. One of not following rules, finding the opposite of success. And then Ron says strong triggers, not much in the way, get in, get out, a 5 lot. Ron's making up for lost time. And if you line that up on his smaller, faster chart, the path is clear and everything is down and the triggers are strong. And he gets in and he gets out and he makes a little bit of money. I was wondering when we'd start seeing those contracts go up. 69.81 is the entry, which means that Gary had a strong trending market. He did have a clear path. He did have a window of opportunity, and he waited for market flow to give him a reversal bar. Gary, it's a nice trade. Great management at the trouble spots. Very well done. And then Alex, let's see what you did. Guys, I'm telling you, your pictures make the classroom. Your pictures are the reason this class is a good class. Alex, I'm having trouble with the link. Let's try it again. Alex, would you... Oh, there it is. Let's see what we have. So Alex, termination condition, right? Not a strong top because the large triggers are up really, really strong. The smalls are below, but the large don't give any indication that this trend is over. When the market pulls back, you enter on a lower divergence from the termination and you manage it aggressively. Alex, it's a different kind of trade, but it's a good looking trade. It's taking advantage of that small chart momentum coming through and that loss of momentum to the downside, using the termination as a launching point. Alex, it's a nice trade. And those large triggers up, say manage, manage, manage. That mid band, the support with all the triggers above it, say make sure that you manage. It's a lower probability trade, but the execution is nice. And Gary, you need help applying a checklist to the NASDAQ. So 50-50 from a great termination, odds favorable momentum on your range chart. You take the momentum style on the way down. And then with all the divergences, you don't take them more. Are you applying your checklist correctly? Let's find out. I like it. Good top or bottom? Absolutely. Termination, you recognize it as 50-50? Absolutely. Odds favorable on the 13.2, which is your smaller, faster chart? Absolutely. Area for entry inside of favorable large triggers? Nope. You took a momentum style trade, Gary. So that one, your checklist doesn't line up, right? Because you took a momentum style trade. This is a trade. This is a checklist for a high probability trend trade or a 50-50 trade. Does that make sense? So Gary, your checklist isn't for that style trade. Your checklist is for a trend trade, but this is not a trend trade because you don't have favorable large triggers. Because you don't have an area inside of favorable large triggers. So guys, one thing that I would encourage you to do is if you're using a checklist, make sure it's for the right trade. So Gary, for that trade, you would have to write different rules, right? You'd have to say the back of the bar clears the fib. I have odds favorable. My triggers are strong. They're outside. It's still a beautiful trade, but the checklist doesn't apply. And then Jay Solar, why is this a good top? then Gary, I would say make one. I would recommend making one, because how can you hold yourself accountable for following the rules if you're not even sure what they are, right? Guys, remember, you don't have to catch every trade. But if you do, make sure you can repeat it so you can get a win-loss ratio. So this is the top, right? When Gary takes the trade, it's not a strong top yet because he didn't get a full reversal. But Jay, when we reach resistance, the divergence high, none of the triggers break. Oh, a previous chart? Sorry. Was it this one? Cool. Jose, termination condition, right? It's not, it is not a strong top. Why not? It never creates a full reversal. So Alex's trade doesn't come from a strong top, but it does come from a termination condition. And he lets that termination condition be the little precursor. But he has to manage it aggressively, right? Because look, the market pulls right into support to the mid-band. None of my trigger lines get through that area of support. Large triggers don't turn. It's not a high probability trade, but he gets in nicely. He waits for that lower divergence to suggest that it may push back down. And then he takes aggressive profits right at the mid-band. Nicely done because of the termination condition. Does that make sense? Yeah, the triggers never cross. That's not a strong top. It's just a termination condition. And he really well took just a little chunk out of the middle. But guys, these are low probability, especially with no triggers through support, especially with large triggers still up, right? This was just a little bounce because price reacts to Fibonacci, and Alex nailed it. Alex did a great job getting in, getting out, letting that divergence print before he takes the trade, and managed aggressively. Guys, these trades make your hair fall out. These trades will stress you out to the end of the day. So Gary, let's get back to Gary's chart. And I think that this is a great thing. So Gary, let's write a checklist for it, right? And let me see if I can make this a little smaller. Whoa, that's huge. Let me go back to your chart, Gary. And guys, that's what this class is for, right? Let's get help on everything. So let's take this same picture. And Gary, let's talk about what's happening. This is how you build checklists, guys. What's it going to take to get me in? And this is kind of small, but I'm going to write it off to the side here. What do I want to see? You may want a strong top or bottom, or at least coming from a term. And that might be your first check, right? That's either a yes or a no. And then you want large chart triggers strong, right? That can be a yes or a no. But when are you going to get into the trade, right? What does it have to look like on the 13-2? How far do you need to clear those areas? What needs to clear the areas? What has to happen, right? So what is my large chart? Look. Add it to the list. What does my small chart look? Add to the list. And I firmly believe, Gary, that you can create a checklist with 4 things. Because for this style trade, that's not mandatory, right? What you need is strength and you need a clear path. So go through. What are you looking for? What got you into that trade? What was it? And if that was it, then that's a good one. If this was the momentum trade that John teaches, which I like, it's a good one, well, then we can go to Discord and let's see if John did the work for us. We'll go to Discord, we'll go to trading rules, we'll go to momentum trading rules, and now you can create a checklist straight from the rules that were presented by John Novak right there in the Discord room. So guys, that's how you create a plan, right? And then when you create your checklist, when you create your plan, post it on your chart. And then my job is to help hold you accountable to the plan that you've created. But my job is to also keep it simple for you. Yeah, for sure. Which is why I give you this, right? That's why I give you this simple plan, because you can keep it simple. And if you're not consistently winning, why are you complicating? Some of you have to. It's just your brain. It's just the way the brain works. So Gary, come up with a checklist. Email it to me if you want. Let me know what you're looking for. Send me a couple pictures. We'll work together to build something that gives you everything that you need to get you in and out of those trades. And I'll give you my 2 cents on it. Pivot from space. Mid-band acting as a termination condition because the large triggers are a full bar away. Picture perfect, Gary. What a great read. Guys, your pictures don't have to be trades. Sometimes they're you saying, hey, you know what? Let me pump the brakes because my rules aren't met. It's just not time. I love those pictures, guys. There's a lot of pictures you can take. Pre-trade pictures are amazing. Is that right? 18 months before an aviator touches combat aircraft? And you know it's 7 years before a doctor does an appendectomy, and it's probably at least 4 years until an engineer gets to have some input on building a bridge. Guys, you're learning a new trade, right? Mike M. Guys, look at that termination condition, and it creates a full reversal, and it provides Mike's odds favorable momentum. Mike says, boy, I sure like this. Odds favorable momentum and a clear path from a good top. He says, why don't I go ahead and get in at the mid-band right there at the large triggers and get paid all the way down? Mike, this is beautiful. This is rules-based. This is stress-free. This is anxiety omitted. Gosh, that's a great-looking trade. And Mike says, if I can do it one way, there's no reason why I can't do it the other. Termination condition, the market continues up, the favorable large triggers. It is a 50-50 because the large haven't quite cleared, right? But you have that support that pushes the market up with crazy momentum verified on a range chart. And you have one tiny little area inside of favorable large triggers. There was a divergence. Mike made a decision. I love his decision. When it comes from a good top or bottom, it only increases the likelihood of success. Do you guys see how he gets out at the first trouble spot, that divergence high? He says, wait a minute, this area is not broken. Divergence is printed. This is my trouble spot. There's no reason why I can't just take 13 ticks on 4 contracts and turn this into a $520 trade in a matter of seconds with all these advantages. Absolutely beautiful. And guys, some of you are going to say, but Mark, he left money on the table. But Mark, there was more profit potential. I firmly believe Mike would tell you, who cares? I just made $500 instantly. And Mike would tell you, who cares? I just made all that money instantly. First target trailed. He had a plan. Mike has a written plan on what he's going to do. That's amazing. What a concept. Beautiful work, Mike. Thanks for sharing that. That's awesome. You lose more than you win on trailing stops. Why not get paid, right? Guys, is anybody not in this to make money? And Mike, if you let 2 run to the fib, momentum said you were going to make it, right? But what's the difference? 6 ticks? Or the potential of this bouncing you back and taking that money? I love it. TTFM, guys. Great trading, Mike. It's simple, right? It's effortless. It can be easy. You just have to let it be. Yeah, and that trailing threshold on Apex. Amen. Gary, termination Reversal bars. Little iffy, right? We had some overrun. The larger still up. We've reached the areas. We got kind of terminations and then that divergence, and we're waiting to see if those triggers roll. And you'll notice, what did I do? Here's the best part. Is Gary didn't post a trade, right? Gary said, I'm just waiting. 3 divergences in the same location help to verify that might be a little overrun, right? Gets us thinking the other way, but we've got some stuff to clear. Gary, your pictures are awesome today. Your analysis is spot on all day. All right, Jose, let's see what you got. 50-50, right? Coming from a strong bottom. Didn't really get through. Termination creates full reversal. Full reversal creates odds favorable. Odds favorable gives us a 50-50 on the 1-to-1, right, Jose? Is that how you read it? And because it came from a termination that creates the full reversal that gives you odds favorable, you might be willing to ignore one divergence. If your checklist, hold it, let's go back to it. If your checklist says divergence, no trade, then this wouldn't be a trade, right? And it's really that simple. So if your checklist said divergence, no trade, what you might do is go back and kind of re-annotate. Let me count the advantages. John Novak used to do, and it made me laugh because not everybody identifies with a bar fight. Some of you have. Some of you scoundrels have been in a bar fight. I like to gauge advantages because every time I take a trade, I want a statistical advantage. A strong bottom gives me advantage to the upside. Odds favorable momentum gives me advantage to the upside. Trading with the trend gives me the advantage to the upside. This trigger look, oh my goodness, gives me an advantage. Everything screaming, having not reached the next area, gives me an advantage. Guys, I've got the rugby team behind me. They're liquored up and they're angry. My problem is one divergence, but it still has strong triggers. And I have an area that has the potential to break and is more likely to break because of the strong bottom with odds favorable momentum. Jose, this is a beautiful entry, guys. And if you use that bar fight analogy, it's 15 liquored up rugby guys against the chess team. And the rugby guys win more than they lose. You've got to do the study. You've got to go through. You've got to take these pictures. If you don't take these pictures, maybe you just skip the trade because it's a 50-50 with divergence. But if you go back and you re-annotate, man, it was a great termination. It was a full reversal. The momentum is better than any look I could ever have. And my window of opportunity is itty-bitty. I'm willing to take this trade. Does that make sense, Jose? This is a great read. Beautiful. And that's how you grow, guys. Repetition. Over and over. Doing the same thing so many times that it becomes easy. Doing the same thing. Gauging advantages, annotating charts, presenting them in the class, getting a little bit of feedback, and moving forward every day, guys. One step closer every day. My commitment is that you're stuck with me, right? Until you don't need me anymore, guys, I'm here in this classroom 15 hours every week. John says termination with no triggers through a fib. Divergence, he says the only direction I can look is long. He's telling himself already. Don't do anything. Yeah, if you've ever met rugby players, it's pretty accurate. Hockey players too. Hey, Mike M., have a great afternoon. Thanks for hanging out today. So this termination condition is creating a full reversal. All of my triggers agree. And John finds an entry to go long from a termination that creates a full reversal. Guys, the CEO of the company is using the exact same recipe that you guys have for success. The guy that wrote the software is using the exact same recipe that you guys are using. What an amazing thing. Alex, let's see what you did, my friend. Alex, 50-50 on the bottom. You take the 50-50 with no divergence and it just doesn't work. Medium probability trade. Look at it though. Termination creates a full reversal creates odds favorable. Odds favorable gives me a 50-50 look on this fib. No divergence, strong triggers, tiny window of opportunity. Alex, the only thing that I might say is that there's probably no reason to leave that much risk on the trade, right? If it doesn't go from this mid-band and 1-to-1, it's so far outside of that window. And then if it's going to go from here, take your small loss and wait for things to agree again. And guys, that's okay. Rather than hold and hope, why not take a couple ticks, right? Little hickey. And then wait for the opportunity for things to happen again. So when this 50-50 doesn't break, you get 3 divergences, right? That's your management opportunity. Everything begins to reverse and you take the momentum style trade and get paid. Alex, beautiful trade. Gary, there's your momentum from a termination, right? Divergence, triggers above, 3, and then no divergence on a pullback to 1-to-1s in a mid-band, right there by those large triggers. Gosh, Alex, beautiful trade. That's that first shot at a bottom. Guys, when the 50-50s don't work, there's a lot of times where they give opportunities the other direction. Ron says, you know what? Just give me a little odds favorable momentum, right? Let the price bars clear the trouble spot. Give me strong triggers. I'll jump in with 5 contracts. I'll jump out with 5 contracts. I'm going to call it a day. My life is full of chili dogs and bikinis. Ron, beautiful trading, consistent. It's the same look every time. Same look every time. Guys, I love this trade. This trade takes an ability to read the charts rapidly. Ron, true story, I did 2 days of market replay on your trade this weekend because I don't catch it in the moment. And I'm refining and going through because I love this trade because it's just chart reading with a clear path. It's just chart reading using momentum. I did good. I think I was up $1,500 by 9 or 10 a.m. in the NASDAQ on market replay. I'm getting closer to it. It still doesn't feel natural though. For me, for something to be incorporated into my trading plan, it has to feel effortless. I have to know those looks. I have to feel comfortable with the looks. I have to have tested those looks over and over and know that it gives me an opportunity to win more than it loses, right? Follow the geese. One line shorter. So David, what's the rule for a good bottom? The textbook best of the best good bottom, David. I love that you posted this in here. Guys, this is how we do it. This is how we do it. Is that it? So here's our textbook, right, David? Price reaches the area, absolutely no trigger lines go through. That's awesome. This is your best look for identifying a strong top or a bottom, guys, when nothing goes through. So let me give you this one. Using that idea that it has to be a termination condition, and that termination condition creates the full reversal, and there's your strong top or bottom. David, what you have going on here is you have a little bit of overrun on the area, right? The triggers start to go through the divergence prints. This is just a pivot with divergence right now. David, when those trigger lines get back above, it kind of helps us realize that it was overrun. It's not a textbook strong bottom, but this divergence, this trigger line location lets me know that things look good, right? This odds favorable momentum and no termination says, wow, why don't we go ahead and get in at the area inside of favorable large triggers? It's a great read. And David, the cool thing is you didn't need that strong top or bottom here to make this a beautiful trade. Does that make sense? Awesome. Great picture. Good question. Guys, this is the magic of Nexgen right here. Post a picture, ask a question, get feedback every day. Every trade, every time. Safia says, I have a termination condition, and this termination condition created a full reversal. And this full reversal gave me odds favorable momentum. And then Safia, we've got a little bit of trouble with the triggers here, right? Nothing's gone through that key area yet. Do you see it? Agreed. And guys, bar fight, right? Rugby team. Let's look at it. Was it a stressful trade? I imagine, because you already had two divergences as well. And you have split triggers, right? But Safia, let's look at the advantages. You came from a termination condition that created a full reversal, right? That's points. That makes me feel good about most things. You also had odds favorable momentum. That makes me feel good about a lot of stuff, guys. I'm kind of stacking that bar fight. I also had strong triggers on the 5-1. I feel good about it. And then Safia, you get in because of the divergences at the higher points, which I like too. I'm not saying that trading into termination conditions is ever a good idea, but what I'm saying is that you stacked enough advantages behind it and you recognized that that was a trouble spot and you didn't hope, you took profits right at it, and then you said, let's go break even. And let's see if it gets to that next area. It is gutsy, and it did come out nice, but Safia, how often is that termination condition going to ruin your day? That's what you have to ask yourself. You may have gotten away with one here. I'm glad you got away with it. Guys, it's always nice when a mistake goes in your favor. Yeah, but don't let that mistake feel like an advantage. Does that make sense? And thank you for saying that you were stressed on that, because I would have been too. Especially with two divergences from a termination condition, I would have been totally stressed. But you survived it, you're there, you got good lessons, and you managed it well, which means that you're reading charts effectively. Good job. Shame on you, good job, whatever you want, right? Nice work, Safia. Guys, watching you succeed with the software is one of the happiest moments of my life. It really is. Watching you guys go from, I can't read an indicator, to, okay, now I can read an indicator, and then progressing to, holy smokes, I can't stop reading every indicator. I need to refine it back down to simplicity. It's fun watching it. Look at this, pivot from nowhere, right to a mid-band, large triggers a full bar away. Oh my gosh, Safia, you do not get to raise your hand alone on that one. Not coming from an area, right into the midband, right into support. And guys, there's those large triggers a full bar away. Is it? It's a process? Poppycock, I say. Guys, this is just recognizing termination conditions. This is taking care of yourself. Not looking for that little momentum style trade because it's right into an area that may hold. Gary, once again, great reads, great chart reading. Guys, it's pictures like this that make it easier. It really is. Alex, let's see what you did. Alex says, pivot from nowhere. There's the mid-band. There's the large triggers. And Alex, you're trading directly into a termination condition, like a textbook termination condition. And you pull one off, right? You get in and you're out break even. Alex, you don't need this stress. Do you? You don't need that stress in your life. Life is stressful enough without trading into support, right? Without trading into an area with no trigger lines through it. Guys, don't get so caught up looking for the quick money that you ignore the easy money. And Alex, I'm not saying that that's what you're doing, but don't get so caught up in counter trend trades. Don't get so caught up in fighting triggers Don't get so caught up in being first that you forget to get paid on the way up, right? That you forget to get that money on the way up or the way down. Alex, this one just didn't have room to work, and that was the challenge there. By the time Divergence printed, you were already to your target. So, great picture. And I think that, guys, great pictures bring us to great conversations, right? Alex may not have thought, oh, shoot. And Alex, the placement of those large triggers, even more so, takes some of the giddy up out of this picture. Great job. Thank you for that. Oh my goodness, we made it through all your pictures, guys. It only took an hour. So what are we doing now? Now we're going to watch the live market, right? Now we're going to see what's going on. We're going to take a look. We're still trying to figure out. This is crude oil. It's going down, but multiple divergences, guys. Let it clear. Right? NASDAQ is an absolute cluster foxtrot Charlie. Support to resistance, to higher divergence, to pivot stop out, to support to resistance, to higher divergence, to resistance. Gads and little fishes. Let them figure it out. And then your S&P is coming right off of support with that full reversal. There's one of your 50-50s right there. Right back to 84. But a lot of divergence is keeping you out of that trade. Guys, sometimes you're going to sit on your hands and do nothing. Sometimes you're going to feel like you've been waiting forever. Sometimes it's not going to be fun and your brain's going to have that little... You guys remember the old cartoons with the angel and the devil on the shoulder? The devil's going to tell you, just take the trade anyway. Trade into that termination condition. What's the worst that could happen? The background's green, the triggers are green, the fib is red, just trade into it. And then that angel is going to jump on the other shoulder and say, hey, remember that your rules create a statistical advantage. Remember that your rules have been proven to win more than they lose. Remember that your rules give you an advantage that's going to take you to that next level, that's going to allow you to create wealth, that's going to allow you to reach your goals. And guys, you've got to learn to tune that little devil off your shoulder and just sit still when there's nothing to do, right? The Great Kazoo. I remember the Great Kazoo. That's when the Flintstones started going downhill with the introduction of the Great Kazoo. I'm just saying. Throwing that out there. Guys, I'm going to take about 5 minutes. Do me a favor. If you have a question, post it in the room. If you have a comment or a picture of a trade, post it in the room. Guys, it doesn't have to be about a trade. It can be about using NinjaTrader. It can be about one of these advantages, one of these looks that we look for. This last hour belongs to you. This last hour, I'm going to sit on my hands. And guys, I'm just going to throw it out there real quick. Carlos, you're a new name in the room. Ask something, right? Tan, let's get a question in there. Walter, let's get a question in there, guys. I know that you have them. Just throw them in there. Iceman, as you get to that next level, don't stop showing me pictures. John in Alaska, I love it when you pop in here. Let's see what you're doing. Let's see if there's anything I can do. All of you guys that are trying to move forward with the software, let me help. Ask those questions. I'll be back in 5 minutes. We'll get into this last hour, and we will have some fun, guys. Back in a few. All right, ladies and gentlemen, last hour. Let's take a look. Guys, what does this say to you? This is a whole day of the S&P, right? There's a huge fight going on in the S&P, it looks like. From support straight to resistance. Possibly a couple opportunities on the way up. We identified where the market stopped, where it turned, when we had momentum, when we hadn't quite reached the next area and goes to resistance. Same thing, termination, creates full reversal, gives odds favorable, and we see those tails again. Guys, it's not always a trade, right? But at least we can start this process of going back and seeing where the opportunities may have been. Termination, full reversal. We looked at these earlier. Doesn't have to be an entry, but at least we can begin to gauge when we have that odds favorable momentum, right? When everything says down, when the path is clear, there's one of those tails on a potential 50-50 right into the termination condition, and now we're heading the other direction. Guys, they're fighting. Buyers and sellers are absolutely duking it out right now. But there may have been some opportunities. So let's go and let's open up a 5-1 chart and look. Guys, there's one of those 50-50s from a termination that creates a full reversal. It pulls right back to support inside of favorable large triggers. And then 3 divergences give you the opportunity to manage out, right? So there was potential to make some money there, to get in, to make a couple hundred, to get out, to protect yourself. And then when that 50-50 doesn't work, comes out the way to support, closes the gap back, pushes down, closes up. Guys, it never gives us an entry. It never gives us a solid area inside of favorable large triggers. Chances are this wasn't going to be something for you. But if you caught the last one, you're doing okay. There's that 50-50 coming from a potential termination condition. And guys, right to the midband, right to support, right at those triggers. Another opportunity using that termination with a full reversal with odds favorable with 50-50, that bar fight scenario. Guys, there's another opportunity to make that $200 or $300. Termination creates a full reversal gives odds favorable. And guys, you may not have caught this one because of these fibs. But if you took a shot, it worked out. But again, price reached support, right? The trigger lines didn't break. It's okay to miss this trade. This wasn't your trade. But then as you come up here from this termination that creates a full reversal, there's your 50-50. Doesn't quite make the area. Scroll back just a little bit. And there's that termination that creates the full reversal. The smalls are trying to work their way through. That fib update happened right in the moment. But it pulls right back to that midband right inside. Guys, you can do this at the end of every day. Go back in circles. See where you're at. See where the opportunities were. Look how that termination creates a full reversal. Not quite, but look how the market reacts. Boom, coming off of that term. We get the trend change. The smalls are down strong, but the large are still up, aren't they? Don't have odds favorable momentum. Rule number 1's not met. All of my trigger lines are above this fib. I don't have a clear path either. No matter how excited I get about this termination, it's just not time, guys. Not yet. So let's do the same thing on crude oil. We'll tighten this up. There's been a little more movement on crude, right? Let's identify the opportunities. Here's one of those tails. That's that divergence high with weak triggers. The triggers go over. They eventually come back below. There's one of those potential looks. Guys, as it's trying to break through, not odds favorable. We won't worry about it, but a potential one right there. And then we also had some 50-50 opportunities, didn't we? Smalls are through. There's that tail with odds favorable. Smalls are through. There's that tail with odds favorable. We'll see what those look like. Price comes off of support, 50-50 on the bottom end. Let's see what the top of this bar look like? It was a 50-50. It made it all the way up to the midband and resistance. The large triggers didn't follow. The gap gets closed, and down it goes. A little indecision. Is everybody following me right now? All we're doing right now is we're recapping the day. We're looking for those opportunities. Was there an opportunity for you to make money if you were a rules-based trader? Termination. Everything keeps going up. And guys, what you're going to find is more often than not that absolutely there were opportunities to get into the market. There were opportunities to manage trades. There were opportunities for you to make money if you understand what it is you're looking for. Whoops. Guys, this is what I'm going to do. If you're not posting charts and questions, we're just going to review. We'll go back. We'll take a look. Could you have made money today if you had a solid plan? If you had an easy little look, right? Just something that gives it the advantage of momentum, that gives the advantage of a clear path, that gives the advantage of an entry inside of favorable large triggers. We did the first part. So let's go look at our 5-1 and let's see what it looks like. So here's our first one, right? 3 divergences, split triggers, ugly. Guys, not many of you are going to catch this trade. That's okay. Not your trade. So we'll scroll back. And this is absolutely beautiful. Everything reverses, market comes back right to the mid band, strong triggers, easy win. All the way up. You could have made money. And now we look at the 50-50, right? One divergence on the first run, right to the mid-band, could have made money all the way down to the next trouble spot. And then multiple divergences in the same location create a management opportunity. Guys, that's 2. This circle goes away. But an opportunity to get paid has definitely been there. What did this 50-50 look like? Termination creates a full reversal. Full reversal creates odds favorable. Odds favorable, no divergence, tiny window of opportunity. Everything says down. Guys, this fits my rules 100%. This is a trade that I'll happily take. This is a trade that I will take and lose. Because of the good top, because of the odds favorable, because of the no divergence, because of the tiny window of opportunity. Guys, this is brilliant. What a wonderful trade. It just didn't work. Guys, when you stop worrying about winning and losing, you're going to find that you win more. When you stop worrying about the result and you care more about the execution of the method, guys, the method has been proven to win more than it loses. The method is what gets you in a trade. Alex, was this the one that you took? I love this trade. Everything about it. And it didn't even blink, did it? We're not in control. But there was certainly a statistical advantage there. Just didn't work. And then we scroll back. So guys, we're what? We're 2 winners, 1 loser. Batting 66.6%. Multiple divergences on the pullback. If you took the first one at 55, you're out at 65 at the trouble spot and break even, probably made $100. There's one of those momentum styles, guys. Didn't make it to the areas inside, probably not your trade. What are the reasons to take it? You want the Sunday school answer? Guys, right to that mid band, just below it, all the way down. It's about 70% winners on crude oil today. You just had to be patient. You just had to wait. So on that 50-50, Alex, why would you take it? Let's go through it. 10-14. Right here? Let me get to it. So this is it right here, right? So let's look at it. A little bit of overrun on the 50-50. I'll make this bigger. Comfortable with that? So there's a little bit of overrun, but that divergence prints, guys, that's a good sign. When that divergence prints and these large triggers can't get through, that makes it an even better sign. It's not a perfect termination condition, but man, there's a good idea that this isn't going to keep going. And then your 5-1 begins to confirm that through 4 divergences in the same price range, through a trend change, through small triggers coming up. So let's identify where we're coming from. A little bit of overrun, 50-50, had the potential but didn't. The 5-1 verifies that this is probably a little bit of overrun. Does that make sense? Potential to break, divergences say don't do it, which means that 44 is likely to hold. When the large triggers roll from above that area that had the potential to break, it adds fuel. The multiple divergences add fuel. The small triggers, really strong. The large triggers up, really strong. The small triggers through this area, from the area that didn't break, that creates the reversal that gives odds favorable. And then that one little area right inside of the triggers, it's just a momentum style trade. Everything says up, and you go. And if you took this one right here without divergence, which I think you took, Alex, absolutely, it's the same reasons, right? The 5-1 confirmed the bottom. The divergence helped confirm the bottom. The fact that a 50-50 failed helps confirm the bottom. And then this was your entry right here. No divergence. Pull back right to a midband and 1-to-1s with nuclear strong small triggers, with super strong small triggers. Guys, that's your first shot. Different rules. That's your first shot. That's the momentum trade. This one's less likely to work with those synthetics down. This one's less likely to work as it's sorting itself out, but that's the look. This look is better when it's a termination, a full termination that creates a full reversal, but it's still a good look. It's still a good read, right? You're going to develop confidence through repetition that eventually has you catching trades like that. Price reaches support, absolutely no trigger lines break through. Did anybody go short hoping that it broke because of the odds favorable momentum? And are you a little sad right now because you broke your rules based on hope? I hope not. I hope you didn't. I hope you said, you know what? I'm going to let it sort out. I'm going to let it do whatever it's going to do, but I'm not going to trade into a line with absolutely no triggers through it, because that takes away my advantage. And then there's NASDAQ, the crazy psychotic crackhead that it is. Whoops. Guys, if you're not comfortable with your rules, NASDAQ is difficult to trade. But if you trade with everything, that sure looked like a good opportunity, didn't it? And if you're trading with everything, we're just reviewing, guys. We're just going back. We're watching the day. Were there opportunities? I like the first opportunity. Beautiful, 50-50, only one divergence, strong triggers. But you had to manage out of this one. Second divergence starts to push it higher. Weak triggers push it higher. Guys, you're losing advantages, and even though it goes down, it gets ugly for a minute. Price reacts to fibs, but there was an opportunity to make a little cash before you went. Little bit of overrun, pushes back, triggers don't blink, retests, termination creates a full reversal. Termination creates a full reversal gives me odds favorable. Guys, NASDAQ has so many opportunities in it when you're comfortable with your trigger reads. Let's see. But NASDAQ also can be a little scattered. Again, not the best look. And that's okay. Do you guys see how I'm doing this though? If you get to the end of the day and you say to yourself, there wasn't one opportunity on the charts, scroll back. Maybe there was. Maybe there was a perfect entry to resistance that had to be managed out of, right? Maybe there was a rules-based trade that you missed. Hit the beach and watch the tourists. '85 and mostly sunny. Ron, you make my heart sad. Can you see mine down here? 58 and mostly sunny. And that's what makes confusion for the new users. Has to be the big chart first, right? Has to be the big chart first. Big chart leads the way. Big chart defines the momentum. Big fart. That made me laugh. Big chart defines the areas, the momentum. Guys, the big chart leads the way. When the big chart is perfect, we don't get caught up in the small chart nonsense, right? We look for those advantages. 1026. Everything says up. We haven't reached the areas. It pulls right back to the area of support inside of favorable large triggers, and the large chart leads the way all the way to the next area, guys, all the way to that termination condition. So get in the habit of going through this practice and every day. And John, that is the question. When it looks like this, hold until you hit a fib with weak triggers, right? But if you get 3 divergences in the same location, manage. It's okay. Home runs are great. Home runs feel good. Big wins feel awesome. 10 small wins feels pretty amazing too, guys. Just read your charts. And if you're unable to read your charts yet, ask questions. Resistance holds, support holds, and now everything's rolling. Do you see it? This look says, hold on just a second, we need to figure stuff out. Now the large are working up, the small are working up. The large never turned over. This support never had a chance to break. And now everything is starting to agree to the upside, so we're just kind of waiting. Is it going to break? Is it going to hold? We're going to find out over the next couple minutes. You're replaying NASDAQ every night? Guys, NASDAQ is fun. NASDAQ is great for adrenaline junkies. But you have to be confident with your rules. I can't stress that enough. If you're not confident with your rules, NASDAQ is going to blow your accounts out. Not necessarily. At 11:11, can you show me a picture? And John, I agree 100%. Crude oil and the S&P allows you to build confidence with your rules. And then, guys, your rules are going to translate to any chart you want to trade, any time frame you want to trade, any market that you want to trade. But every market has a different personality. Gold is pretty popular. But gold has a different personality than crude oil. It tends to overrun a little more, which means you have to be comfortable and you have to be okay with stops that maybe are a little bit larger. NASDAQ is the same way. Crude and ES tend to be very smooth, easy, good stuff. Sophia, it may be that one of us is off one tick. It may be that one of us has a little bit of corrupted data. And I don't ever want to just put it on you 100%. It may be me. But NASDAQ on 11:11, right here, you had 2 pullbacks. I can't even see 11:11 over here. Okay, over here on the larger chart. So let me pull up my NASDAQ larger chart. At 11:11. I did have 2 pullbacks, didn't I? Mine got caught up a little bit, created a second bar. Yours looked a little different. And it may be just one little bit of corrupt data. What did your 5-1 look like? Shogun, most people will trade that same setup. All those charts. And Shogun, you can also use just a 13-2 and a 5-1 as well. It's just different, right? That's more than enough to understand whether or not the advantages are present. You're welcome to add extra charts. So Safia, one of us may have a little corrupt data. We can ask John. John, on your NASDAQ at 1111, do you have 2 pullbacks on the 34? And yeah, if you're into bigger moves, guys, the 34.5 and the 13.2 is your trade. If you love those bigger moves, a little more breathing room. Smashing through fibs, guys. We are officially on a strong round up, and it went right to resistance. And then John had both of them as well, it looks like, Safia. So it may be yours with a little corrupt data. Jeremy, you have one. Maybe the Novaks are just in cahoots, right? Yeah, Shogun. I mean, if you can do it. What's the SL on stop loss on NASDAQ? Where the market shouldn't go, Jay. Remember that your stop loss is just, that's a great question. And let's answer that one. So Jay, remember that your stop loss is where the market shouldn't go, right? So whatever number your stop loss is initially, it's only that way to give you the ability to react. So on the NASDAQ, typically the areas are a little bigger. There's John's settings. But remember that your stop loss isn't a solid concrete number. Your stop loss gives you time to react, to put the market where it shouldn't go. So if this is NASDAQ, no matter what my stop loss is set at, it still needs to go where the market shouldn't. But John says a 24-tick stop loss gives him time. It usually puts it outside of the window initially, and it gives him time to adjust it where it should go. 12 ticks on crude, on gold, on the S&P gives you that reaction time, gives you that space to react. But ultimately, your stops go where the market shouldn't. So your initial stop is nothing more than giving yourself a cushion to be able to put it where it shouldn't go. Does that help, Jay? Yeah, and 24 ticks is only 120 bucks, which is pretty small. That's the exact same as it is on crude oil, the same monetary worth as it is on crude oil. And guys, notice that termination never created a full reversal. This never became a strong top. Your large trigger said, we're going to continue going up. Eventually, all your trigger lines agreed. Some people take this little pop right off the fib, a little continuation breakout style momentum trade. Little advanced, but still an opportunity. And everything is led by the large chart. Guys, what do you want to talk about? And that's perfect. And guys, sometimes people will say, well, my stop is 8 ticks, right? Sometimes people say, well, my initial stop is 8 ticks. Guys, what if 8 ticks keeps you inside of that window of opportunity? 21, Jerry. What if 8 ticks, or what if 10 ticks keeps you inside of that window of opportunity? Well, then it has to be adjusted, right? Don't get caught. Yeah, and 10 points. I'm assuming it was 10 ticks, not points. I'm hoping it was 10 ticks, not points. That's a lot of points. Yeah, if you need that many, you probably didn't take the best entry. It's a good point. 12 to 14 ticks on the slower, mellower markets, guys, is usually more than enough to allow you to react. And that's all it is its reaction time, right? So if I sell the market, well, that's not a good time to do it with weak triggers. My initial stop, yeah, 10 ticks will stop you out of the NASDAQ, Jay. That's why John Novak showed you his at 24. So 24 ticks on the NASDAQ is the exact same monetary value as 12 ticks on crude oil. But what it is it gives you time to react, right? It gives you time. It's not, if I sell the market, my 12 ticks isn't necessarily my stop. My 12 ticks gives me time to put the stop where the market shouldn't go. Does that make sense? And guys, this isn't a rules-based trade. I have absolutely no momentum into it. But that 12 ticks gives me reaction time. That 12 ticks says, hey, Mark, get that stop where the market shouldn't go. And that's all it is. It's just reaction time. It's not, this is 12 ticks, and it has to say 12 ticks no matter what. Is everybody comfortable with that? Jay, does that make sense? My entry is at 92, right? 12 ticks puts me at 96. But the reality is I want to be a little further out outside of that window of opportunity. I may have to move it to 13 or 14 ticks. That 12 ticks gives me reaction time. And this doesn't stay where it's at forever. Once I get a reversal bar, then I'll start changing it, right? But on that same token, let me see if I can find a picture that illustrates it a little bit. And I'm sure that I will. So on this picture, if my entry is at 2350, outside of my window of opportunity is really at 25 and a quarter, right? So it's only 7 ticks risk because of that consolidated little area where the market is likely to continue. So if I were set to 12 initially, I would reduce that risk where the market shouldn't go. And that's one of the great things about using these areas for entry, in being able to move your stop, being able to recognize where the market shouldn't go. What it does is it allows you to have less risk on a trade. My entry is at 30.65, right? So probably 30.75. Where the market shouldn't go is 27.75. That's about 12 ticks. And you'll go through that over and over. You'll go through that process. Your initial stop is only about reaction time. It's only about putting you and giving you the ability to move a stop where the market shouldn't go. Guys, we have a little more time. Crude oil's trending down. NASDAQ is trending up. S&P is 50-50. Trying to figure out what it wants to do, right? Smalls above, large below. Everything says up. No divergence potential. Gold is trending down. I don't even look at gold, Shogun. I've got enough on my plate. But isn't it easy to determine? Watch this, guys. I don't need indicators to know which way the market was going. What's the current trend on the S&P? This is how easy it can be. It's up, right? Because the background's green. That's only the first part of the equation. Now, what's the momentum on the 13.2? It's strong, right? Small's above the large. Do you see how I'm just going through the process? What's my termination conditions? Well, it's 50-50. The smalls are above, the large are not. Guys, I can go through and I start with that process every time. 21, Jerry. Not 24. And when you go through templates, if I'm not mistaken, you should have, you're not going to have a 21 range chart probably, but what you will have is any range chart generic with market flow, and that'll work for you on it. Let me know if you need any help with that. So guys, we just went through the process. The background is green, therefore the trend is up, therefore I'm only looking for rules to be met for high probability trend trades long. So I go to strong triggers. Do I have them? Smalls are above the large are wide, they're angled in the direction of the trend. I have the advantage of momentum, so now I ask myself about the clear path. Ha! I beat John to the tech question. That never happens. Now I have a 50-50 on 95.50, guys. This is an area that hasn't broken. It has the potential with the momentum, but it's 50-50. Which means that if I'm looking for a pullback on the 5-1, I want strong triggers, which I have. I want no divergence. There is no divergence potential. And I want a small window of opportunity where that market is likely to continue. And that's the top of that window. So I identify my large chart. I identify the conditions on my small chart to make sure that I'm consistent, right? That to make sure I'm using my checklist. On a 50-50, I should have strong triggers on both, no divergence coming from a good top or bottom. And if no divergence, then my rules say enter at the area, guys. All I'm doing is following my rules. All I'm doing is making sure. All right, great picture, Jonathan. Let me cancel this out. But guys, that's a pre-trade ritual for me. All right, Jonathan. So, couple things. The first thing that I really want you to do for me is I want you to write rules on your chart. Why did you do what you did? Right? What made you decide to go long here? That's going to help me help you. So let's look. You went short. This was that 50-50 trade. So one thing that you don't have going on, Jonathan, are you with me? Awesome. So the first thing that you don't have going on, Jonathan, is you're robbing yourself of 2 time frames worth of fibs on your 13.2. You're not showing your 5-1 synthetics and you're not showing your 21-3 synthetics, which gives the illusion that the world is wide open for you. This trade was a 50-50 trade right here, and we talked about this one in class, and it was a great looking 50-50 trade. So let's start with that trade. I'm going to take a picture, and we're going to go through everything that I see, and let's talk about what you saw and see if we can't do a little refinement, right? See if we can't put you on a path. So Jonathan, the first thing, you have odds favorable, right? It's a beautiful look. And on your chart, you have absolutely no termination conditions. Once again, rules 1 and 2 met. Are you comfortable with the rules, Jonathan? to feel as though, man, this is the best of the best. This is what I want to see in order to take this trade. Cool. So rule number 3 says that your entry comes from an area inside of favorable large triggers, right? Which means that you're looking for fibs, midbands, or one-to-ones inside of these large triggers that are down and strong. So 2 things happened here. The first one is you jumped in super early, afraid that the market might go without you. Does that make sense? You got in at the large triggers, but you didn't get in at the area inside of favorable large triggers. And then the flip side of that is you exited at the area of resistance inside of favorable large triggers, which means that your exit is actually where your entry should have been. Does that make sense? And Jonathan, this was a loser. And it happens. Doesn't mean you're a loser. It just means that you had the advantages and it didn't work. But if my stop is right outside of that window of opportunity, it's a small loss rather than a larger loss. It's a loss that has the advantage of momentum, a clear path, and also an area inside. So rule number 3 creates a little less loss, a better opportunity, right? So there's your first trade. Thank you for the pictures. Jonathan, if you write your rules on the chart every time, you're going to begin to reinforce these rules. What gives you the best entry? Where stops shouldn't go. On your second trade, there's a couple things happening. The smalls are definitely above the large. The momentum is good, right? Feel good about it? I feel good about it. There's one concept that you didn't take into account on this one, and it's when the midband behaves as a termination condition. Anytime I reach a midband, even if price goes by it a little bit, if my large triggers are a full bar away, are you familiar with the gap theory, Jonathan? Have you seen this one before? And this is for everybody, not just Jonathan, guys. The gap theory says that if price pulls away from those large triggers on the 13.2, fast and far, and it snaps into something, whether it's a fib, a midband, whatever, it's probably going to come back to those trigger lines. And that's exactly what happened on this trade, is you reached that midband, it overran, and your large triggers just didn't follow along. And when your large triggers didn't follow along, we could anticipate price to snap back. And that's exactly what it did. And by the time price snaps back right here, there's another pattern that comes into play. A bad bottom, a termination condition without divergence that doesn't come Fibonacci area, when it accelerates away and closes that gap, very often it goes back and it finds that next fib level. So the gap theory keeps you from trying to get in at the midband, right? And it keeps you from getting run over as it goes on to that next fib level, because this bad bottom, this gap theory, means that we're probably going to make that next key area. Go back and re-annotate your chart, right? Go write that information on there. Put it into your checklist, put it into your spreadsheet, and what you'll find, and this is pretty cool, is that gap theory happens all the time. Price accelerates, finds that midband, almost to support, the large triggers don't follow, and it closes that gap right up. It's not a long trade, but it's a keep you safe trade. It keeps you from not taking that entry that becomes low probability. And if I scroll back, we'll probably see that look a couple times. All the way to the midband, right, from a bad bottom, snaps back to the large triggers, finishes the move down to support. So this is just one of those patterns. All the way, bad bottom, straight to resistance, large triggers don't follow, it closes the gap and continues the move down. Bad bottom, all the way to resistance, finishes the move down. So you'll begin to recognize these patterns over and over. And they're going to help you out a lot as you go through. But that gap theory, understanding that it may come back and close that gap, does an awful lot to keep you out of those trades. And then understanding that it's come from a bad top or bottom will do an awful lot to keep you and create expectations when that gap theory is in play. Bad bottom snaps all the way back to the triggers, all the way back to resistance, and then it continues the move. Bad bottom all the way to resistance, and then the termination creates the full reversal. You confuse what makes it a bad bottom? Keep it simple, Iceman. You're comfortable with termination conditions, right? If price reaches and absolutely no trigger lines break through, it's a termination condition. So price reaches, absolutely no trigger lines. Thank you, John. No triggers break through, it's a termination. Price reaches support, no trigger lines break through, it's a termination. One-to-ones, no triggers, it's a termination. So that's the start, right? Embrace the recipe for terminations. And then when that termination creates a full reversal and gives you a rules met trade, that's when we've got that strong top or a strong bottom. So it's really just a matter of price reaches, no trigger lines go through, this is a termination. If this termination creates a full reversal, well then it's a strong top. Does that make sense, Ice? It starts with the term, and then it goes into that next one. That's the most basic form. And then once you get really good at recognizing those, you're going to see one of those instances that John Novak talks about in his latest video, which I thought was brilliant. When you come up and you get a little bit of overrun in that divergence prints, and the large triggers come back below that key area that didn't break, this is a good looking top too. This is how you identify that overrun. But if you start with termination creates a full reversal, it makes it easy. And then as you grow, you'll compound a little bit. Maybe. Let's see if we can find it. He did it the other day. He gave a great lesson. Let's find it. Videos, oil recap, NASDAQ, high probability trend trades only. Private session June 22. I believe this was the one. So here you go, Gary. He probably posted it in Discord. He sent it to me. No, I'm not going to kill you, John. Guys, simplicity. And John Novak's about to type it in the room. If you build a foundation, if you understand termination conditions, if you understand momentum, if you understand the best entry, guys, it's going to take you to the next level. The idea is that you create a plan for yourself that has been proven to win more than it loses, that you are successful with simplicity, and then from simplicity, you're going to grow. Do one thing well and then add another. Do two things well and then add another. Be successful on two charts and then add a third. Guys, I don't ever want to keep you shackled to nothing but high probability trend trades. I don't ever want to keep you just stuck on 50-50s with no divergence from a good top or bottom. But if you embrace these plans initially, guys, it gives you a plan that's capable of winning while you do your study. It gives you a plan that's capable of consistency while you increase your study. Does that make sense? Keep it simple. You've got the rest of your life. Jonathan, anything can happen triggers. You jumped in and got lucky. I like the annotation. Super clear path, anything can happen, right? It tried to pull back to the mid-band, it didn't make it. But Jonathan, this is kind of a next level, right? Everything says up, everything says go, every trigger is up, everything says the market's likely to make it to that next key area, and you took advantage of it. Uh-oh. Guys, did everybody lose sound or is it just Jonathan? Is anyone hearing me? Okay, Sophia, you got me. Cool. So let's get Jonathan to reboot. What is that, John? Oh, that's all the links to the YouTube. Ah, I see what you did there. Text file. Well, that's pretty good. Good stuff. Are you back, Jonathan? And guys, here's that bar fight scenario, right? Everything says up, every path is clear, every trigger lines up, and the market goes up. Jonathan jumped in. He got lucky, but he also managed it beautifully at the trouble spot and let divergence take him out. So even though it's not a high probability trend trade, guys, I can find a lot of great things to talk about on this look. And that's what you're going to do is you're going to start simple, right? You're going to keep it basic. Guys, you're going to learn how to enter the market. When you learn how to enter the market, you're going to learn how to manage it mechanically. And you're going to give yourself a plan that's capable of winning while you continue to study. And then you're going to add in one that's not quite as high probability, but still is chock full of advantages. And you're going to learn how to manage it. So what you're doing is you're creating this foundation and then you're growing from this foundation. You're doing a little more each day, a little better each day. You're asking more questions than you think you should because there is no limit on the number of questions that you ask. Guys, dominate the classroom if you need to, if that's what it takes to get you where you need to be. And you're going to work on simplicity, and then from simplicity, you're going to go advanced. And from advanced, well, you might be doing okay, right? You might not want to go beyond that. But the idea is to make money, isn't it? And when you have a 50-50 trade with no divergence and it pulls back to support right at the large triggers, well, there's an opportunity. You're going to learn to see these opportunities. You're going to learn to trust these opportunities, guys. And that's what the first 30 days is. It's building trust, right? This is from the Oxford languages. That firm belief in the reliability, the truth, the ability, or the strength of someone or something. Guys, your something is that methodology, that set of rules that gives you a statistical advantage. You're going to have confidence, belief, faith, freedom from suspicion or doubt, sureness, certainty, certitude, assurance, conviction, reliance. All of those things. When you do the study, when you post them in the room, when you get the feedback, when you fill up that spreadsheet, when you simulate the correct rules, guys, you will develop truth. You will remove distrust and skepticism, and you'll feel confident taking each trade regardless of the result because you know that the process yields results. Guys, developing trust is such an important part of what we do, but the only way you develop trust is through repetition. The only way that you develop trust is through seeing it over and over again and then taking what you see and posting it in the class every trade, win, lose, or draw. Because if you win and the rules are wrong, it may be a short-term victory and a long-term failure. How are you going to know the difference? Guys, you need that feedback. That's what we're here for, to help you learn to read your indicators. If you're on Simulator, if you participate in class, guys, you can't lose money. The demo is free. The platform is free. The data was free. The education is free. Everything is free. You're learning how you're going to learn in a demo, guys. You're learning that we're here, that we're available, that the feedback is available, that you can be successful with the software if you do your part. There's no risk of loss or capital, but you need someone to tell you what you did right or wrong when you're new, guys, and that's the educational magic. That's what we do, this live feedback every day. I'm going to recognize patterns in you. You're going to recognize patterns in yourself. And we're going to work together hand in hand until you achieve your goals, until you're comfortable, until you're confident. And then you're going to divorce me. You're going to leave me. You're going to be like, you know what? I'm so good at these rules. I'm so comfortable with my plan. I'm so capable. I'm going to leave this room and I'm going to go make my money. And maybe I'll pop in every now and then just to say hello because that Mark's a pretty swell fella. But my goal is that you never need me again. And the more you participate in class, the quicker you're going to reach that goal. And guys, that's it for today. Great classroom. We did the recap. There was a lot of opportunities out there, guys. If you didn't catch them, go back on Market Replay and catch them today. Bring me pictures in the morning. If you are doing study tonight and you find yourself with a question, take a picture. Bring it to class tomorrow. If you were quiet today, if you were sitting on your hands, if you didn't want to type in, I want you to have a beer tomorrow morning before class. Get your courage up. Don't really have a beer. I'm not encouraging drinking at 7 in the morning. I mean, if that's your thing, whatever. But whatever it takes to get you comfortable to post in this room, guys, start getting that feedback. Start using those tools that are available to you so that you can get exactly where you wanted to be. I'm always available. Breakfast of Champions. And Alex is like, I've got you, Mark. It's afternoon here. Guys, have an amazing afternoon. Look for your rules to be met. Go through those 4 videos. It's going to change your perspective a little bit. And we'll talk about all of them in the morning, guys. You're so welcome, Jonathan. Thank you for having the courage to post. Guys, I'll see you in the morning. Everybody, be good.